something starts, you have to have a reason why, right? So if it's momentum, right, you're going to be trading with the momentum side, which is simple. When you have a daily come down and it starts to head up, that is simply the first move to the upside. Normally what's going to happen there is you're going to let the daily come down, which is normally around the 20 line area. And then when that starts to bounce at that point, that creates your third wave up. That's where you would be thinking to yourself that this is the best area for my longs, right? So that kind of puts us in this situation here where if we were trading, this right here would be considered an area that we would say that this box is the upward box in this area. Okay. Now if I go to my daily and I say, okay, I'm trading, we start with a 4 hour, right? Now I know that I'm in the box, right? Because remember on the daily, if I look at my daily, currently I can see right now that based on my daily, I'm in the zone where I'm seeing this is the best time to trade up until the 4 hour makes a third move down, right? So here's what we have. We have the 1 hour or the daily bouncing up here, going up. It's always going to have a pullback, right? Remember, always keep 3 moves in your mind. Here's the pullback. Now, on the third wave up from this pullback is the best time to trade, right? So, currently in this area here, on my daily, I'm just going to mark it here. This right here would basically be, if this printed, this would print on the day that I would say that this section here would be my downward move. And then this right here printed the time on my daily that I would be trading up. So this section here, I would be looking for the pullback trade. And this section here, I'm looking to go long, you see?
And now this is a 4 hour box, but you're looking for 1 hour pullback?
No, this is the daily. So this is just
daily.
my daily, right? So this is just if when I start my day off, I pull in and I say, okay, first I want to look at, you know, and what I would be looking, if I'm looking at this chart, I would be going to say, okay, here's the big pullback. Obviously this giant pullback here would be a nice short for the daily. I'm expecting a bounce. So if I was going to short this, this is where I would short the big 1 day pullback because that's after the bounce, right? So 1, 2, 3. Now, as that starts to pull back, this is where I would be shorting all the way down until I see a return off the 20. And then once that happens, I would look for the 3 move to the other side. So during this part here, during this box here, I would be in a position where I would be thinking that I'm shorting in this position. Okay. Now over here, I can see that it makes its first bounce, right? So you see how it bounces here? It starts to head up. Now, after it makes its bounce, right, showing me that it wants to reverse, right? So I put my white box saying, oh, here's a possible reverse. What I wait for is confirmation of the reverse, right? Which means as I'm checking my daily, I would say, oh, at least today I'm in the upward movement of either going sideways or at least the volume and the buying pressure is to the upside today, right? But it's still wave 1, right? So this is wave 1, meaning that it's just trying to show me that it wants to do something different and it's starting to build. What I'm looking for is the part where wave 2, which is here, makes its move down to basically confirm support for what it wants to do. And then that, if it has support, that's where I would see wave 3, which is this one, where I would confirm that at that point, this is going to be the best move to the upside. Now, once this finishes, right, the future of this is going to be this. Once this gets to the point of wherever it's going, let me go ahead and make this box a little smaller. So we're going to assume that it's going to 1 day, 2 days, 3 days, go sideways, then come across, and then head down. So I'm going to assume here that eventually at this point, I'm going to get to a part where this is probably going to become purple again here, right? For some reason. Now, during that, what I have to have is this has to peak out. It's going to make a move down. Then it's going to confirm a bounce. Then on that bounce, that's where I'll see the bigger move because that's wave 3, right? So this will be 1. This will be 2, confirmation. And then this will be the trade that we actually go into our trades for because that'll be the third wave down, okay? So that's the future of what we're looking for right there, okay? So right now,
how do I, what if, like, when I'm live in this, right? So when you say you're waiting for the pullback or the reverse or whatever, like, what is my, like, what's the, like, what am I looking for? Like, what, like,
Yeah,
this
so
is
here-
where I get stuck. So it's like, yeah, it's easy to see where it dipped down, hindsight, but how do I know what, like, okay, boom, there it is. Now I know, like, to pique my attention to jump on it.
yeah, so this is just getting into your head where what you're always going to be looking at is going to be the 3 waves, right? Always confirming that you're looking for 3 moves, right? So that you don't jump. So we had wave 1, wave 2, here's wave 3, right? So currently we're in the middle of wave 3. So far we've had 1, 2, this is the second day of wave 3, okay? Now, this is just to tell me if I'm looking at this, currently I'm still in wave 3, which is the best long push or long trade possibility, or if it's down, it's the best down possibility. So right now I'm in wave 3. So overall, the sentiment is up, right? Which means that if I'm shorting, I don't look for really big pullbacks that are going to dump like crazy because right now my sentiment is up. So pullback should average the normal pullback, which is 50% on average, 30 to 50. That's the normal pullback on an upward movement. On a downward movement, when a short happens, if it doesn't have the support of a third wave, then you're looking for 50 to 70% pullbacks, right? So that's kind of like how you start to understand where you're at and what you're pushing, right? So now that we understand this is the second day of the third wave. Now, if I'm trading on my day, which once I know which direction I'm at and I know the market condition, now I slide over to a 4-hour, which is my current position, right? So if I go back here, looking at these waves, I can see that this was the original push. There's a second wave pullback. And now this is my third wave up, right? So in this position here, when I'm looking at these trades, I know that I'm in an upward position on this wave here. And that's how I can see the breakdown. So now, once I was looking at these trades here, here are the options of the 4-hour, right? So let's put in 4-hour pullbacks, right? So the 4-hour pullback starts here, right? And I'm going to put this down to where it ends, which is here. And I'm going to make these high pink, right? This is just where a 4-hour has peaked to the top. It starts to pull back. And then the next top is here. And this is where it starts to pull back, right? So these are going to be 2 things that we look at a little bit later. And I'm just going to name them real quick. These are the 4-hour topped, right? Ba-doop, ba-doop, ba-doop. Now, normally when these pull back, these are normally going to be the best pullbacks, A-trade pullbacks, right? The best possible pullback, right? Now, when you see these pullbacks, right, and these start to happen,
was the maroon box or whatever. So it's like, yeah, all right. So where you see it starts to go up and then it has like a little dip and then it goes back up a little bit and then it comes down. So all that happened within 4 hours.
So if we're on the 4-hour time frame, right,
Okay.
Every time you're on a section, you can, every time you move your mouse over, you see that line that's moving?
Right.
That's a candle. That's when it prints. So when this printed, this down movement, right? We won't see this down movement until here, because that's where it prints, right? We won't see this down movement until here, because that's where it prints, right? So yeah, so what happened here in this down section, you had, once it started down and we could see down, we have a 1, 2, 3. So there's 12 hours before we get the next big move down. See what I'm saying? So it'd be 16 hours, and then in the 16-hour mark is where you would get this box here. Now I'm just going to turn this into a 2, which is basically the biggest drop of that box. That's where it just falls in. But we don't see it until here. So, but there is 4, 8, 12, 16 hours before we see that drop. Is that what you're asking? So it'd be 4, 8, 12, 16 hours. And then it goes 20, 24, 28, 32, and then before it heads up, 36 hours.
Okay, so I guess a better, so right where the arrow first wave points up and it meets the second arrow, right? So you got the blue and the orange, they look like they almost like touch at that first dot that you got right there, right? See how like it comes down, kind of goes up a little bit before it crashes. Like what am I looking for there?
Well,
Like how do I
has
know
to
that
cross.
that first, I'm sorry?
It has to cross, right? So normally when lines intersect, they either cross or they reject, right? So these are kind of far apart where you wouldn't expect them to cross. You would actually expect them to reject there, right? That's kind of what that is. So
like all the way up the top to the left, that's what it's supposed to do right there, where they come together and then the blue goes underneath.
Right. So right here, when the blue, they go sideways, and then that's when the blue breaks down right there. Right.
Okay.
So that's where you're basically, when you're looking at this, when you look at that blue, it's that first breakdown move right there. Boom.
Okay, so that's move one, because that kind of answers my question, because now where it comes down, see they almost touch again, right where you got the arrow.
Yeah.
So if I'm looking at that in real time, is that's telling me, the way I'm interpreting right now, don't get in because it didn't cross.
Yeah, well, yeah, it's also topped, right? Don't forget that when we were dealing with the when we're working with the RSI, there's a top here which is 100, right? So it always maxes out at 100. So if I drew that line across, made this yellow, right? That's normally the top of the line, right? That's normally where it's going to hit the top and go sideways, right?
Gotcha.
So once it hits the top, it comes down and starts to go sideways, and then right here is where it actually like falls down, and it shows that it's getting a little bit of weakness right there, right?
Right.
And that all
so
that tells
the
you.
100's like, hey, look over here, it's time. Like that's your first signal.
Well, yeah, that's the first sign of fatigue in buying pressure, right?
Gotcha.
Okay. And that just lets you know it doesn't mean the price. Remember, the RSI is sentiment. It's basically who's buying, who's selling, and are people thinking this is a buy or people thinking this is a sell. Just because the blue line, which are the buyers, starts to fall down, doesn't mean the price will go down. Because the sellers are the ones that dictate when the price drops, right? Which is normally when you will see the red line head down, right? So if we slide over here, you see how really all that's happening here is that there are no buyers. So the seller line just starts to go sideways. Here is where you see the first time that the seller line shows a downward movement of its own. You see right there? That's the first time that you can look at RSI and go, oh, the sellers are just kind of like going sideways, and now they're like, that's a blip in the systems. Yeah, that it's a sharper move. So when you look at it,
Right.
this is just fading down. And then all of a sudden it's like the trajectory of this would be like this. If you're watching it go sideways, that's a
Yeah.
sideways move. All of a sudden,
Right. So
this is
so if you
where
pull
it
that from the
changes.
moon indicator where the orange and the green split, if you take that up, that's right at that point, isn't it?
Yeah, that's why we have the moon indicator. See, the moon
Gotcha.
indicator is the money. See, we can
Right.
tell that the money changes here. You see?
Yeah, literally right on the point. Yeah.
Yeah. So
But
we see
that's
the
split in that green candle.
yeah. So we see the change of the money 4 hours before we see this big move down. You see? The
Gotcha.
money changes here, which basically marks us where the our moon indicator says, "Hey, the money's changing." Then 4 hours later, we get the RSI part where it shows us that, oh, it's no longer on pattern. Because pattern here was like this. That's where you see the difference. But the moon indicator already told you that because that's the money. The RSI is just sentiment. It's just letting you know what people are thinking. So they just ran out of money here and they stopped. Buyers are like, I'm not really buying. I'm at the top here. I'm going to wait. Sellers are just going sideways. And what happens here is the money is maxing out and then goes to a point where it says, okay, there's losing volume in money. Okay, we're less buyers with money. Okay, we're going into less buyers. And now at that point, that's where people say, oh, we might be at a top here. Let me pull back. And that's where you see the pullback, right? But this is kind of like, this is just to show you when you start to go into your zones, like how to recognize, what you're looking at, right? So here, let me open up these books here. These are just to break down zones that you're in, and then that way that determines how strong the longs or the shorts are going to be depending on how strong or of the zone you're in. Are you in an up zone or a down zone, right? So this is just kind of breaking down your day, right? So when we're looking in here, we can see that depending on what time we're looking at this chart, if we start looking here, we know we're in a topped area, right? So we're going to expect a pull down a little bit here at some point where it starts to move down. And then once that finishes, we're going to expect, another move to the upside, right? Because it has to pull back, right? So now if I was looking at this as a whole in these boxes, right? This just lets me know that if I'm looking at the chart and I'm currently in this position here, right? So if I'm looking at the chart and it happens to be this time right here, I can tell that I'm in a downward move. I'm in an upward trading zone, but I'm in a 4-hour sentiment exhaustion, meaning that more than likely the trade can go sideways until people come back and decide it's a buy. But if I looked at my volume, I could realize that there was a shitload of volume in this trade. Look how it's above the 10 threshold, right?
Right.
And then I would expect a pullback here, right? So if I looked at my 1 hour and I was in this zone here, right? How I would determine my shorts is if I'm in the 1 hour zone here, and that's just simply the zero line, which is here. This is top and bottom of the zone. If I was in this, I would see that at this particular time, here's my 4-hour move. But if I'm looking for shorts here, right, I'm in an upward move. What would happen is I would expect a 2 move from the 1 hour, right? So this is what I want to show you. It's kind of like this. So the 1 hour is going to have its move to the upside. I'll make this orange. Let's get it. We'll make it white. That's fine. Then it's going to create the first pullback, which is kind of this one here. Normally this is the first 1 hour pullback, right? and it bounces. When it does its bounce, that's what we're looking for. That goes into the third pullback, right? So if we're looking for pullbacks on this, normally, without looking at the chart here, we would basically be like, okay, here's the push that we're looking at. There's going to be the first 1 hour short, which would be here. And then the second one, which would be the one that we'd be more interested in, would be this second pullback here. I'm going to make this one blue, because that's a second move in there, right? So that's where we would be playing into that particular move. So there's a drawdown, right? So there's the push to the upside. There's the first pullback. And then the second pullback is where we would be looking for the move that we want to get into, which would be in this blue box here. Now, as that starts to happen, right, that's just basically after the push, there's a pullback. There's always a wave 2, wave 3 happens, and that's the third move down. That's the one we kind of like would look at from this particular situation. If we move across, right, we could see that normally in this area here is where we expect that pullback to keep kind of like staying in that zone there until it builds up strength, which is basically where we would see the change of the 4 hour. Because see how this red box starts the 4 hour down right here, and that's where the 1 hour starts to go up, and then it has its first pullback. Once that pullback happens, we expect a bounce. Once that bounce is over, the second short is going until the 4 hour starts to head up, which is basically right here when the 4 hour changes direction, right? So that would be right here is where that would be the area that it would be looked at that the short's over. And now it's working towards building up, right? And that build up is the end of that short side. Here is where the daily starts its move, or its wave 3 again right here. It starts to make its move to the upside, which is happening right now, right? In this situation, this is the downward move that's happening. The 4 hour, right? This is the first 4 hour short box, right? Which means that just like the 1 hour, right? The first 1 hour box goes up, goes down, right? Let me turn this one blue. That's the first one that goes up or down. The second one is here. I'm just going to call this the second move.
So the start of the short is, I'm looking for, in my 4 hour box, I'm looking for the sentiment to be going down. And then once I know it's headed down, now I'm like, okay, let me lock in on the 1 hour. That's like step 2.
Well, so when you see this is going to be, here's your first 1 hour down. Here's your second 1 hour down. All right. First blue box is the first 1 hour down. Second blue box is the second 1 hour down. Right. So the 1 hour down is your move. You just have to realize that the first time it happens, it's not going to be the strongest. That's the first. You need to go with the second.
No. I got that part. I'm talking about in the beginning, what I'm looking for to know that, okay, boom, here we go. A short's ready to happen, because on the 4 hour, I'm seeing the RSI go down, correct?
Yeah. So anytime you have a move, right, there's always going to be a pullback, right? So when this white box comes into play here, right, and it starts the first move up.
Yeah, well, what triggers that? What is triggering that box? Because
I think he's asking what makes the trade live. What makes the trade live?
Yeah. So the daily's headed up
not so much, not so much live. So the daily, if the daily is showing, like, I start with the daily, and we're going to work our way shorter time frames, correct?
Yeah, right. So the daily just lets you know that it's an upward day, right? Meaning that all the daily really is telling you is that when you make a trade, your expectations of the trade. So if you're going long,
Yeah.
don't expect long. If the daily is heading down, don't expect longs
Right.
to be great. Expect shorts to
Yeah.
be better.
Yeah.
Right now, when
Yeah.
you
That's
move to
what that's what I'm saying.
yeah, when you move to your 4 hour, that's just giving you areas of interest of what the current situation is, right? So when the
Yeah. Okay.
hour,
Yeah.
yeah, when you get that 4 hour move to the downside the first time it starts to happen, right?
Right.
It's if the 1 hour is coinciding with it, which is the first blue box, right?
Mhm.
That's where you can see bigger moves because they're working together, right?
Right.
So for instance, like if we go back one box here, right? And we put a 1 hour move here. Okay, that's the 1 hour up. And we say, okay, this is the first 1 hour down, right? Which is this box here,
Mhm.
prior to anything else happening, right? Because at this point here,
Mhm.
this is actually in the purple box. This is a downward trend. This is showing the 1 hour made a move up. Here's the first 1 hour pullback. It doesn't have a 4 hour zone with it. It's just doing its normal pullback. It's just doing its up and down. The second time it does it, it has a 4 hour zone with it, right? So normally when you can pair up a 1 hour and a 4 hour together, your results will be a lot higher. Probabilities will be a lot higher.
Oh,
Yeah, that's what Lucas said. He was like, if the daily, the 4 and the 1 line up, you're golden.
Yeah, because it's like I said, most traders need 2 confirmations of a trade.
Right.
If you have 3 of these boxes all in a zone, then you've got 3 confirmations, and that's a very powerful. You're in the golden pocket zone, right?
Mhm.
So
Yeah, I think we were saying the same thing, but I was asking. I don't think you were understanding, or but the way the question was. So if I'm going in, I just woke up today. I'm pulling my charts, and I'm immediately going to the daily, and I say, okay, it looks like the market, the sentiment is going up today. So now I'm going to be like in the mindset, okay, I'm going to my 4 hour box with going into it thinking this is going to be a long day. Now, if I woke up and I see that the daily it's going down, I'll be like, okay, now I'm going to get in the 4 hour mindset of we're going to be looking for the short. So then once I'm in that 4 hour, now I'm looking for the 1 hour triggers to say, okay, dude, this is the next step. So you got step 1, the day, what is the day doing? Based on that, step 2 is going to be, what do I look for within the 4 hours? And then once I decide that, then the third step is to look at the 1 hour to then get ready to go live, so to speak.
Triggers, right? The 1 hour.
Am I hearing you correctly?
Yeah, that's exactly it. The 1 hour are the triggers,
okay.
right? So
Like
now,
that's what DC. That's what I need. I need it like simplified, stupid, like just plain and simple. That's how I learn.
Yeah. So
Me too.
This is just basically here we get the 4 hour down and we have the 4 hour blue box with us, right? That's that first pull down. Now once that bounces, right, that's where we get this second move. Normally the second time over is going to be the stronger move because it's already gone through the resistance, right?
That part I understand. The part that I wasn't understanding is how do I even get there? Like, you know what I mean? I like that now I have myself, like I literally have my notebook, and tomorrow or whenever I'm gonna sit in front of the computer and I'm gonna pick my coin and I'm gonna go to the daily, and that's where I'm gonna start. Step 1, find my daily, which way is it going? And then step 2, like I'm just gonna check off on my notepad and go, and that's just like I said, simplify it, make it just stupid.
Stupid, yeah. So now I just
stupid easy.
Stupid easy. So I just want to kind of show you like we can take a kind of like a look here where we can see where when we're in our purple box, which is here, and we get the change of the purple box, right? Which is let me see here.
And what are you calling the purple box? What's the
No,
definition
that's
of the
just
purple box?
that was just that's just in the downtrend, the daily down.
Okay,
Yeah.
gotcha.
So you can see right here, when you're in a move and it's kind of like exhausted, then you look for the reversal. So you see right here, we get the white box here. That's where this is the box that's the white box area there that it starts to, show that it's going the other direction, right? Now there's, like I said, every time frame you go earlier, you get this move earlier, right? So prior to that, we had that downward box, right? And this is kind of how to look at it is this. Here's your daily downward box here. Right? Now, we look for the reversal, which would be here, which is where we get the daily upward movement here, right? That's kind of like the daily section.
Yeah.
Okay? Currently, right
How
now,
do we see that though?
that's on the daily. That's the first thing we went over.
Yeah, but like looking at
down
the
here,
chart
look.
that you're at
These are
now,
the daily
it
here.
just looks like it's.
They're the same
Oh,
boxes
you're the
that are
daily
here.
on the top.
Yeah, I'm just putting it up top. Here's your daily. I'm moving
Okay,
it to the top now. This is when the daily was in a downward move. Okay?
And what's the definition of that?
The daily. That's the first thing we mapped out. The daily. Right here.
Because sometimes the daily, from my experience, it'll turn into a doji,
No, okay. So look at this. Here's your RSI.
which is indecision.
Yeah. You see how the daily hit the top here? And it started down? That's the purple box.
Okay.
And that holds
gotcha.
until it goes through its exhaustion, right? Which is basically it has to kind of like move across. Normally, you're going to see moves that happen where it bounces. See how it bounces here? Goes up.
Yeah.
And then starts to come down again, right? That's where it's chipping away. Now, if it would have came here and went down further and started up, then this would be the end of that daily down. But what happens is it goes up, goes sideways, and then that's when it always has to have an exhaustion, right? And that's where we see.
How are you defining exhaustion?
A bigger move down, right? So here's its move down, right?
Okay.
It has a level here. Here's the level.
Gotcha.
That's the first level. It has to break that level to give you your exhaustion.
Gotcha.
When that happens and it starts to head up, which is here, the daily, that's where the daily changes. Right? That's the difference of when the daily comes down here and it starts to move in the upward direction. That's where we get this white box. That's the move up, right? So that's the daily there. So you could put this there. The exhaustion move happens, and then from that move there, that's where we start to head back up above the breakage of support, right? So that's your daily. See how that says daily right there, the yellow D?
Now I get it. Now I get it.
Right. So now currently on the daily up, which is what we're looking at here, we've had it push up. It has pulled down. See the support right there?
Yep.
So now this won't become a downward daily until it breaks that exhaustion. So
gotcha.
currently, we are in a white box until that happens, which would probably be somewhere down here. All right. Now,
Excuse me. I'm sorry, VC. I got a quick question. Okay, when you say exhaustion, are you speaking of it going sideways? I don't understand what you mean by that.
So it's just like a candle, right? So here's the daily. It makes its first move down. Okay, you see this? Here you go. See the RSI? It heads up, touches the top. It makes its first move down from the top, right? That first move goes down to here. Right? You see right here?
Yes.
Just like a candle, just like a pattern, that is support.
Or the floor, so to speak, right?
Yeah, that's the bounce. That's where it's showing support. Just like you draw anything that you're drawing, that is going to be the support area, right? So you have a support
Yep.
zone in this
Okay.
area here, right? So you can kind of look at that and say, okay, that is a normal support area that it's getting. What you're expecting it to do is a move down, right? It's going to bounce because you're always going to have orders in there. It's going to find some type of support. Then it has its third move down, which is here, right? At that point,
Right.
that's the biggest move down. Now, when it bounces from that biggest move down, right, that is going to be the top of its move, like a double top or a double bottom, right? So now, once it finishes that move, that's the biggest move of its day. It's going to bounce because it's going to start changing directions there. And then it's going to go to its next move. This is wave one of the bounce. Normally, wave one pulls back 50%, which would be to that support, right? It doesn't pull back to that support. It breaks that support. Had it bounced off of this support, then we would be considering this the new daily.
Oh.
Gotcha.
Oh, okay.
But because it breaks through that support, then we would say, okay,
It's
it
there.
can go to a double bottom, and we could consider the next time it printed up, which would be here, this would be the new daily up. But what happens is it shows exhaustion and it breaks through there. So that's why once it shows that exhaustion, now we know that it's broken through 1, 2 supports. Remember how we teach you how to get into an entry, look for support, go to the second greedy entry?
Yep.
This broke through both supports. Once it breaks through both supports, this is exhaustion. Once it breaks through there, this is the end. So when it starts to move up here, that is the bottom, which is where we start the daily to the upside.
So long, yeah. Okay.
Because at that point, it's already gone through its 2 levels of down, and it broke both of them. So now it's at its bottom, rock bottom, basically. That's exhaustion.
Right.
Now, those 2 boxes are going to basically switch hands. We are now currently in the up box. So when we look at the up box, which is happening right here, we look at the move that it's making, right? So that move starts to happen. We're in the same scenario. It has its first move up, which is happening here. We can see the move up. It prints. We see it at this. This is where it prints for us right here on this level here. It moves up. Now, once it moves up, it has to have a pullback, which is where we see the pullback here. Now, this pulls back all the way down to here before it starts its second move to the upside, right? Showing that it's continuation of building momentum. Now, what we have is this. That creates support on this level here, which we expected eventually what's going to happen, just like a regular pattern. This is going to head up. It's going to hit the top at 100. When it's done, it's then going to make its move down. It's going to look to hit this support zone on its way down. Off that support is going to have its next hoorah, which will create a double top.
Okay. Or a breakthrough, correct?
Or a breakthrough, right.
Yeah,
now,
gotcha.
If it comes down and it doesn't hold support here and it breaks through, right, that's where we're going to be looking to where what's happening is you're getting a change of direction here. That is where purple would come back into play and say, oh, we just broke through our support there. Now we're going into exhaustion side. It shouldn't come back to this support zone. It should actually come down. It should bounce halfway, right? So this bounce should give us a bounce here. Then it should have a breakout here.
Okay. So when it doesn't meet the 50% rule, that's like bing, bing. It's probably going to keep going down.
Right. So
gotcha.
what it has to do here is bounce there and then give us a double top to the top here. If it falls and it doesn't break its pullback by 50%, which would be a line here, and it breaks through there, then what we have is a retest on its major support. If it breaks through there, then we have exhaustion. So what we can expect is at that point, all the way back to the bottom, which is the shorting position there. That's what we're looking
now.
at.
Let's say it breaks, right, and we start to go down. What am I looking for? Like a certain, like to confirm that? Like, is it like?
No, that's just your daily,
like how
right?
much?
So remember that. So you have to realize what time frame you're looking at and what it represents. The daily just represents the overall strength, right? If it's heading down, you're not going to have so this is why when you make your trades and you're targeting, right? So this is all is data, okay? So this is how you determine market situations, right? If you are trading the same steps consistently, using a 30-minute, 15-minute, whatever you're doing to get into a trade, and you make the same trade with the same steps, and you see that you're targeting a 0.5% move with a 40x, or you're targeting a 1% move with a 20x leverage, right? Whatever it is. And you see that it's hitting every time, and you see that it's going for, you always wanted to do an extra 0.5% to 1% more. And you see the continuous of every time you make the trade, you're seeing that the trades are giving you your 0.5 to 1% more move. And then it's consistent, meaning the market conditions are repeating the cycles. If by chance, as you make the trade, you realize that, it actually barely hit my area before it reversed on me, you can see that the market's getting weaker because it's starting to close in on your position, right? Because that's why we always have the 50-50 rule. We don't go for 1.5%, we go for 50% of that, right? If we need 1%, we need a 2% move, and we're taking half, which is 1. But if that move starts going from a 2% and it starts going to 1.5% to a 1.25%, I understand that my volume is getting weaker on my longs, which is probably because my daily is against me. See what I'm saying? So when the daily is against you, you have to anticipate that your moves are not going to be as great as when they're with you. When the daily's with you, the odds of allowing to, hold it a little bit longer, or, having the safety in there to say, it's going to be 2 to 3% pretty easy, these are going to hit pretty good, right? Versus, when you have the daily against you, starting to watch the positions on how close they are. If you're normally getting 2% and you're starting to get 1.5, 1.25, it's probably because your daily's against you, right? The momentum's against you, right?
Yeah, the crowd's changing position. I got you.
The money's just not there. So that means that the same scenario, your longs, right? That's why we always have the targets where we're normally targeting 50% of it anyway. So even when the market conditions change, you're still in a good position because you're trading based on terrible market conditions ideology, right? So when the market conditions are with you, it just makes your trades a lot easier. But you don't trade on great market conditions. You develop trades with the worst market conditions, so that when you got to realize when the market gets bad and you made a trade that is designed to execute in a bad market, you don't give a shit if the market's bad because that's how your trade is developed. The only difference is when the market becomes great, you can start going, I'm starting to get 4 or 5%. Maybe instead of taking 20 or 40% of my target, maybe I'll go for, I'm going to double it. So instead of 20, maybe I'm going to go for 30 or 40 because the market conditions is now giving me more of a run. But your development of your trade is based on worse conditions because that's the market that matters. The markets are normal, and I don't like saying bull or bearish. The reality is market conditions are normally the lowest conditions, they average 80% of the time. That's a normal market condition. What the problem is most people don't trade unless the market conditions are great. Like everyone's sitting out right now because they're like, oh, Bitcoin's at 60. Now, in mentality wise, 2 years ago, Bitcoin was at 15. So
Right.
theoretically, people were dying to see Bitcoin to go from 15 to 40. They were praying to God that it got to 60. Well, it's at 60 and now they're not trading again. That's why you can't let Trading 101 become your guide, because everything they're talking about is just, it's nonsense. The market is a market. It moves 80% of the time with the people that are in it. When extra people come in the market and create bull markets or big markets, that is not normal trading. That is where people who've been trading the entire time and learning how to trade in the real market get to do a 200-300% more in volume because there's buyers. It's like owning a store, right? If you owned a store in a town and in a beach town, and all year you had your normal regular people coming in, you average X amount of money, and it's no difference than Walmart, right? Walmart basically averages a set amount of money every single month, and in November and Black Friday is where they make 500 to 600 times more than their average. They only make money in November and December. It's a bull market. The rest of the time, Walmart makes money based on a normal set of rules. That's what the market is. There is no bull or bearish market, right? There's only a market. It does the same thing. This market has had the same moves and same percentages over the last 8 months, and the difference is, if you take the moves today measured against when Bitcoin was 15,000, the moves are 3 times better today. Like, we're getting 1, 2, 3% moves consistently in what people would call a bear market, right? What you have to understand is that the market conditions is, people try to learn how to trade in bull markets and think that's real life, right? When you own a store and it's you own a store and all of a sudden it's the summer or the holiday and your product is in, that's not your real life. Like, if you own an ice cream store and it's winter, you're not doing a lot of business.
Right.
But Baskin Robbins makes a hell of a lot of money in January or in July, right?
Yeah.
Right. So people, they only focus on their wins or their ideology or their trades or their strategies were all built on people during a bull market where you could have threw a fucking stone and been successful, right?
Right.
Trading is all fundamentals. It's a systematic system. The only thing that changes is when you trade systematically is when a market has more people in it, you don't have to go for your normal 20%. You can go for 40 because the market conditions say, hey, it's Christmas, guys. People are shopping. And you can take advantage of those people and ride those bigger waves.
So just like the holidays, all the idiots come out.
Yeah. Right now, you guys are learning to trade in a normal market. This is a normal market. What you're understanding here is the psychology and the systematics of how it moves, right? So what you really have to understand is how a market moves and the 1, 2, 3, so that no matter when you're looking at a market, whatever it is, you are following the same rules and guideline to your trade. And the only difference is when there's more people during Christmas, the 3 wave is going to be twice as big. The only difference is the wave 1 is going to be twice as big, right? That's it. And the pullbacks, when there's more people, will be less because more people are throwing money in on the pullback versus when the normal market. So that's how you kind of like start to see when you're making the same trade over and over, you're getting results. And when you track your results of, okay, when I entered the trade, how far did it go back? Perfect entry. And how far did it go up? I got out at 1%, but it went 2.5. You make the trade again. Your pullback goes 0.5%, like your first time. Your upside goes 2.5% again. Same exact trade, except you got out at 1%. Next time it happens again, it repeats 0.5% back, 2.5% forward. You say to yourself, you know what? I'm averaging 2.5. Maybe instead of 1%, I go for 1.25, 1.5%, and you rinse and repeat. And then if you see where the trade is like, oh, I pulled back 0.25%, but I went for 4%. Well, the market conditions are better. You go for a little bit more. If it goes the other way against you, where your average trade is 2.5% and it becomes 1.5, you realize market conditions are getting a little tighter. Don't take risk.
Right.
Stay in your zone. Realize that this is not where you can let it run. This is not where you can hope it will bounce harder. This is where you just take your profits and move on about your day. But what you can say is, well, now that I know that my trades are getting shorter, that probably means my pullbacks will be bigger.
So you're saying just accept the market on the market's terms.
Yeah. And you accept the market terms by every time you trade, watching the results, right? Just because you get into a trade and your trade closes at 1% doesn't mean you go and see how far it goes to say to yourself, oh, I'm looking for a 2% trade. I got out at 1%, it went to 2.5. Next time you do that same trade, it goes to 2.5. Then you could say to yourself after the third time, you know what, I'm going to go for 1.5 on here. I have gotten good with my entries. Now, if you're getting into an entry and the pullback is 0.5% and it only goes 1.5%, or if the pullback is a 1% and it only goes 1.5%, you need to figure out how to turn that negative pullback into positive gain, right? You shouldn't be trying to get higher gains. You should be trying to get lesser pullbacks. If you fix your entry, that will create more gains. If your normal pullback is 1%, if you cut that in half, that gives you an extra 0.5% worth of gains. That's what you work on, is the percentages of pullbacks versus percentages to the upside. Fix your pullbacks to maximize your gains. And then when the market is giving you more percentages and you're taking 1%, but the trade keeps doing 3%, then you target 1.5 to 2%. But you work within that box. There are no grand slams. There are no home runs. There's just the average results that happen all the time. You'll know when the market conditions change, because you'll see every idiot in the world will be back trading again.
Right.
All the people that were begging for Bitcoin to get to 60,000. That's what I mean. It's like, guys, and what we have, which the reason why we wanted Bitcoin at 60,000 was so that the market during the downside is still tradable. You know, one time we were sitting here in 2021. It was December of 2021. I shit you not. Staring at Ethereum, right? That when you stare at a trade and you go to your trade center, you know, when you're making a trade, there's the trade box, right? To the right. You see all these trades here?
Yeah.
We were literally sitting, I remember it was clear as day. It was like a week before Christmas. Looking at Ethereum, right? And you see how these numbers are moving here? Bro, that fucking there was not one number moving for 1 to 2 to 3 minutes.
What?
Yeah. That is a bear market.
That's insane.
There was not one order, one trade. I promise you, I swear to God, we sat there and we were waiting. There was it's like how it has a pulse now. You see the red and the green going. It did not fucking, dude. It is that, you ever heard the term, the world has stopped turning? That? There was not one trade executed for 2 to 3 minutes on average.
That's insane. And that was with Ethereum was what? Second in market cap?
Yeah, Ethereum was 1,600, 1,800. Yeah, Ethereum's big. 2021, this is after the big move.
Yeah.
We sat there for a while and we're like, is this broke? And finally, finally it ticked. And we're like, wow, nobody is trading. There was nobody. There was no orders, nothing.
That sounds impossible.
No, I know. This is
There's
2021.
8 billion people in the world. Nobody's trading.
Nobody was trading. Not a fucking tick. We just sat there looking like, We thought at that time it was we were using KuCoin. We're like, damn, is this broke? Did KuCoin crash? And then finally it moved. Like Ethereum barely moved a tick. And we're like, wow, there's nobody here. It was a ghost town, bro.
Wow.
The reason why we wanted Bitcoin at 60,000, we wanted institutions, is so that every day it ticked. Like, this is what we want. We want to have averages. We want to know that there will be on a 1 hour upward move, we can get 1 to 2%. We wanted to know that, you know what I mean? That's all you need in a market is a 2% move, right? You don't need Bitcoin making a 10, 15% move. You just need a 1% move. You just need shit to go up and down. You just need people here, right? So what you guys are learning right now is basically the normal trading market. That's what this is. This is a normal market. This is where you learn. So when you're piecing together the basics that we're doing here, like looking at the trading view, is that what we're doing is basically just showing you, like, when you're trading, just to know what type of day you're trading in. You know, you're trading in the daily's in a downward move. What does that mean? That means my longs aren't going to do 3 to 4%. They're going to do half. They're going to do 1.5 to 1. I need to make sure that when I make a trade, I'm adjusting for that situation. Maybe you have been successful doing 20x leverage. Now you need to say to yourself, you know what? Maybe I'm going to do 25x leverage just to make sure that I get that extra little juice. You know what I'm saying? Like, or you say, you know what? I'm going to trade the 4-hour downs since I'm in a downward daily trend, right? It's to teach you what to expect during those time frames, right? So when you're making moves or making decisions, you're not surprised by the outcomes because you're expecting certain outcomes, right? So that's kind of what we have here. When you go to those, you know, when something breaks this supports, just like anything, and starts to head down, that's where you're going to start heading into the exhaustion, meaning that there's nothing there to support it, and it's going to be rotating the other direction here. All right. So now that we have that there, what we're going to do is just move these up to this section here. So that's our purple box where we have down. This is our daily where it starts to move up. It hasn't shown a change of direction yet. So currently we're still in the upward box, right? Now, the other thing I wanted to show you is when we open this up is kind of the breakdown of where we see the downward moves, right? So here's the first blue box. Let me open up this. Here's our first upward trend. We have our, let me just slide over to my 1 hour. All right. So what we're looking for here is the first 1 hour blue box and the second 1 hour move here, right? So when we look at that, we put these boxes out here. Here's your first daily to the upside, right? Now, what I wanted to show you was the 3 boxes. Here's your first, after the big moves, here's your first blue box, which is your first 1 hour down at the end of the daily down, right? This is the upward trend. This is our first blue box on our upward trend. And then this is the second time that we get that upward trend closing out our 4 hour down, right? So you see these blue boxes here? So that is equivalent to these blue boxes here. You see that, Ashanti? These are blue boxes.
Yeah, I see it.
So now we're just going to move up to just the candle section, right? So what we have
Mm-hmm.
is basically this. When you get to this section here, we know that if you're in the daily, right, and this is the daily down, we start to see the move down, and we look for the exhaustion move, right? So basically, in this move here, we can see that we're in a downward trend. It comes down.
Mm-hmm.
What's going to happen when it comes down? It's going to bounce up. And on that bounce, if you're shorting, this is where you would start taking shorts in that position, right? So it's kind of like now it's all it basically is a parallel line. So it starts to come out. It has its first move to the downside, right? And it bounces. And that's kind of where you can see this becomes the normal top. This becomes the normal bottom.
Mm-hmm.
And there's your channel. Now,
Yep.
that's the full channel. As it comes down, it bounces. Short the bounce, it touches. You're shorting again. It bounces, shorts again. You can see it played that pretty much a few different times. It played that move right there, right? So
Mm-hmm.
now that's kind of looking at your overall. So over here we have all these peaks at the top, but we're in a downward move. So we know from here we need to be playing the bounces into the shorts. And then once we find the channel, we short the tops to the bottoms. And that's pretty much what we live on, right? Now at that point, when we don't get that to where it's going back up to that level, right? We end up in a channel, right? Because we're looking for that next big short. Normally it's the top to bottom. We end up in a situation where it goes sideways right here. And we can see that it's now created a new top where it's starting to fight here.
Mm-hmm.
Now as it fights here, there's this entry, confirmation of that entry, and that's where you would get into, because what you'd be looking for is that final 1 hour exhaustion short into that blue box zone, right? So that's that kind of like breakthrough move. Once you break through that bottom, right, that's the end of your trade. Once it breaks through that, that's pretty much it, because the only thing it's going to do from there is the next move, which is what? It's going to retest. If it retests, it's just going to go right back to where it just hit. And then once that's done, there's your 3 moves. What's next? Move to the top. See how that plays out?
Mm-hmm.
So breaks through, it retests, comes back down, hits again, and then starts to build momentum to the upside. Now, when you see that momentum to the upside, that's kind of like what we consider wave 1, right? So when wave 1 starts to build its momentum and it finally has this blow off where it breaks out here, this creates this first 1 hour pullback, which is right here.
Mm-hmm.
From that 1 hour pullback, it then bounces, right? This is kind of how this is like your Doge played out the first time, where you've seen this big move and it starts to go down and you start to buy in here. But this is the first 1 hour move. See what I'm saying? And also on the back end, it's a pullback at the tail end of the daily down. So it's like, this is at the, most of the time you're going to see the top is over here. The bottom's going to be somewhere in the middle. This is at the tail end where you've already had an exhaustion bottom, right? It's not too much more that it can go down. So this is just a
I wasn't in that time frame at all. Like I was 1 hour and under. The only time I would even think about looking at the 2 or the 4 is when I'm trying to go, I'm unsure, and I'm like, okay, let me see what it's been doing for a while. Am I going up? Am I going down? And then based on that, that's when I drop down to see. I would go from the 1 hour to the 30 to the 15, 10, 5, and then if I'm really unsure, like when I was like panic buying or whatever, trying to get back in, I was like teetering between the 1, 3, and 5. And that's when I bought back in the second time, I think at the 705.4. And I was like, yeah, I was like, because I'm looking like going back instead of tracking or charting like you did on the RSI, I'm charting the candles. And I'm like, okay, boom, here's my safe line because they're all hitting this top level. And then I put the super safe line that's there, and that's the top of all the wicks. And then like a little bit above that is I would consider the safe zone if I'm to put a stop loss there.
And the only thing there to help you out there is that once you see a big push, look for the 1 hour pullback, the first one, and then from there you expect another big push, right? So just kind of like where we are here, we can see where once we've got a big push here, and we just, let's say we're using the 1 hour, right? We're not paying attention to anything. We're doing the 1 hour. Here's the 1 hour box starts to head down. We get the pullback right here. That's that first pullback that we get. Then there's a bounce, right? That bounce takes us up here. And that's where, if we're looking at that, that's where we would be saying to ourselves, the next, short the tops, right? And you can see it kind of goes sideways. That's where this would trigger a 1 hour short again into this first box here. Now, what happens there is that because it's coming out of a third move, right? Even though this is a first short in a upward move, right? And that where this kind of comes into play, right? And this is where this is skill level, okay? And what I mean by that is the more information or confirmation you have and more information you have to understand what's going to happen is your skill level. Without using the daily, okay? Let's say your skill level's not there yet. You're just using the 1 hour. You see the 1 hour move here. There's a push. The first 1 hour box happens. There's your pullback, okay? Then you expect the bounce. And once you get that bounce, you expect the tops. Then confirmation to be the 1 hour down. There's your entry right there, right? And you look for the down. Now, even if you're not paying attention and you don't realize that you are in a daily upward move here, which means that the first pullback you get into on the 1 hour is going to be a no. Because
I was going to say, it's going to be, why would you go against the crowd?
Right. But that's the daily. But this is skill level, right? So let's look at this at a different scenario. And what I'm going to do here is zoom in to get you to where even if you fuck up, right? And this is the daily down. And we look at the tips of these candles. If you decide at this level here that you are not looking at the daily, you see the 1 hour go down, and worst case scenario, you put yourself into a trade somewhere here, right? On this yellow line, you get in and you say, okay, the 1 hour is heading down. And you happen to be in a position where you don't realize, based on your skill level, you don't know that you should have the daily as confirmation of the best trades of the day, or also to confirm to you that the very first short of a day in a daily long is probably not going to be the way to go, because momentum has just shifted against the short, which means the first time a short comes up, it's probably not going to be the greatest, and you're going to need the second short confirmation, which is our next blue box here, right? So let's say you get in on the first blue box and you get in here at 7314, right? Now, depending on your trade, depending on how you're set up, we're just going to measure this out. Even if you got the worst possible entry, the trade only goes against you 0.5%, right? So depending on how you're set up, normally that's going to be right at your stop loss. So normally what's going to happen here, you're probably going to get stopped out by hitting this wick there. Now the other scenario is, when you get in at this position, did you reach your target, which was a 1% moved, or you should be shorting 0.5%. You should be looking for a 40x or 30x, but somewhere in 0.5% move down is normally the target that you're looking for. But since this is kind of like a trick play because you've had a wave 1, wave 2, wave 3, you would expect this to be the best pullback. And these 2 wicks that kind of take you out here later in the day, they are something that normally wouldn't happen to you unless you misread the daily. That's going to be skill level. Because this trade, if you look at it, if you got in this trade the way you wanted to, and you were doing...
Is that my trade?
No, this is an example of what happened prior.
Okay.
So if you got in this trade, this is kind of that's what I'm saying. The difference between what happened to you was you were trading on the first wave, and you were trying to catch this pullback. This guy, this trade is after a third wave. So the ideal here is that this is actually a really good trade here, right? And he's taking the first 1 hour down without checking his daily based on skill level, without doing the extra, just kind of getting into there. He has an opportunity here where it has a bounce that happens to go to here. So if I move this over a little bit, you can see the red bounces up to there. Now, in reality, if he's shorting here, let me get a short position. In reality, if he's in a short here, this pullback or this bounce that he actually goes through, he ends up getting, we'll get almost a 0.9% move down, and the up bounce was only 0.3. So this is a successful trade, right? Depending on how you did it. Now, how we would do this is a 40x leverage, right? Minimum, we would do 30, and we would be targeting 20%, which we hit here. Now, on the other side, we would be looking here. This would be a 10% pullback, right? Because it'd be 30x here. Normally, we're tagging a 0.5% pullback, right? Which is right about there. And if we were doing a 30x, right, that 0.5% would be 15% pullback there. So this would be, we would probably survive this pullback. I would say majority of the time, because the entry that we're making is right here. We would be going above these candles here, right? Because we would use those as resistance. So if it did bounce against us, we would calculate here. But this is kind of like where you decide to make a trade, right? So what would happen here is you would be getting into a trade here. At that point, you would calculate the pullbacks on these other big candles here. Then you would decide on this trade based on your structure whether or not you can get in here or you need to move your entry higher because of your loss. You're only allowed to lose so much. Most of the time, 0.5 is the average loss, so that's a 10% loss on a 10x leverage. It's a 20% loss, you know what I'm saying? So on here, this would be 10x leverage, it'd be 5%. On a 20x, it would be 10. So that fits our criteria. Like I said, depending on, I'm not getting into the entry here. I'm just saying, depending on how you're structured here, more than likely, this pullback isn't enough to get you out. Even if you put your entries a little bit higher, right, back here, moving this up, right, you're going to survive this pullback. But at the end of the day, we end up in the worst case scenario with the worst entry possible. We end up with a 1% move. So we're going to make our 20% here. So this is a successful trade, even though skill level wise, he got lucky because he doesn't realize the daily is just swinged against him and momentum is to the upside. But the way the trades are developed, remember, so I said earlier, the trades that you are doing in the philosophy of Trading 102 of targeting 20%, 30 to 40x leverage, 20x leverage, every time you break that down and your target is 20%, you're always putting yourself in the worst case scenario anyways. So when you're doing a short, your short should be 30 to 40%. This is going to clear even when you misstep, right? So even in this misstep, which not reading the room right, which means that there's an upward move here, it's still successful. Now, if your skill level's better, then you would say, oh, I got to use 40x here, and I'm targeting a 0.5%, and I'm taking 20 because I've got everything against me. You're aware of the conditions, which allows you to execute more successful, meaning that you'll make this trade 9 out of 10 times versus a guy who doesn't have the daily skill level. He's probably going to make this trade and win this trade 6 out of 10 times. See what I'm saying?
Right, because we're making the safer trade.
Right, and he might go for too much, trying to hit a 1% move and only do a 20x short, right? Because he might not be reading the room right. He might be thinking that he's going to get a big pullback, so he does a 20x leverage, targets a 1% move, doesn't adjust his entry to his stop loss correctly, and then ends up getting caught here, right? So at the end of the day,
that's me. I'm that guy. I wasn't looking that far.
And at the end of the day, this still comes down to the fact that kind of how we talk about retail investors are more successful at making trades than professional investors, simply because sometimes they misstep, but they use the right leverage and they're successful, right? But at the end of the day, remember, your trade structure is broken down to where you have the ability to lose 4 trades out of 10 anyways. So even if this trade fails, the odds are we're probably about 50-50 coin flip here on the people going to win or lose, right? But the reality is by using the 1 hour, if you're following the basic 1 hour protocol, which is you get the first 1 hour pullback, which is this blue box. You enter on the second 1 hour pullback and you get your trade, right? Now, if that trade fails, right, and then you realize like, oh, that trade failed and it bounces, what happens is when you get to the next 1 hour down, which is your normal 1 hour down trade, you'd then be re-entering again over here, right? This time you'd get a trade somewhere in this point here. You get your upward moves, or you should realize on your fail, what do we always say? Buy the top, right? So you'd have a top here that pushes. You'd have another top that pushes, and then you'd be working your way into a 1 hour down zone, right? Which you would put yourself here again. And then like before, if you're following how to do a trade, you would simply take the top of that highest candle that just happened. You'd say, okay, that is where I'm expecting it to bounce. I'm going to get in here. If I measure this out from where the entry is, if that resistance doesn't fit my criteria, which see how it's at a 0.1% or 0.5, I would want that to be more of a 0. The way I trade is, my trade is I'm only allowed a 0.3. Okay, so just kind of give you an example. If I'm making this trade based on my trade structure, I'm only allowed to give up a 0.3. So what would happen is if I'm deciding to get in this trade here at 737, I have to adjust for this possible, upper wick. I would have to move my stop loss to that point slightly higher, and then my entry would be here. And that's it. And that's my entry. So at this point, if this trade doesn't do what I needed to do and it goes from here and it just goes down, well, then I'm not in that trade. That's just a trade I miss. Right? That's just the way it goes. Now, my second opportunity is once I see the trade does something like that and it bounces, and then I see where it shoots back up again, right? And let's say that my entry's a little bit different, and I say I put my entry higher. Let's say my entry's up here, right? And I'm over here, and I'm trying to get an entry off this zone here, and it doesn't hit that, but I'm up here. Then I see this jump that happens in this super spike, and then it starts to go down again. That's where I can reset myself and say, okay, here's a spike. Maybe I'm too high on this entry. Let me reset and say, okay, if I'm shooting this would be my current entry. Let me see what I can put in there. And all you do there is you can take a a point from the point it's getting resistance to where you're at, 1.47, cut that in half, be about a 7. And then you can turn around and say, you know what, I'm going to put my entry halfway. So then what happens is this ends up jumping down, it bounces, and then I get this entry here. And then I'm in the trade again. You see what I'm saying?
Yeah.
If it doesn't bounce,
so you would,
and I don't miss it, I miss it again. I just miss it.
Mm-hmm. Would you have put it? You would have put it, being at the yellow arrow at the top. That is the greediest buy-in, correct? At the top of the wick.
Yeah, because what I'm doing is I have to protect myself and be above that. So that means my stop loss has to be somewhere here, right? Now, once that plays out a couple times, if I miss this, let's say it doesn't go there. Let's say that, for whatever reason, it only jumps up this high, and my entry is set here, and then I see it hit, and then then it shows me 2 moves down. Then I'm realizing, oh, money's disappearing. So now I have to start looking for lower levels of the entries, right? And what I'm doing is I'm chasing an entry, but I'm not jumping. I'm still waiting for a bounce. So if I see the bounce start to happen here where it goes sideways and it's bounced here, and then it's red and it bounces here, then I'll probably jump in here. Right? But that's how you work your way down. But if I keep missing, and this had a lot of opportunities. Sometimes you're not going to get these type wicks. Sometimes it'll look like that.
Right.
Sometimes you miss again, and then this wick doesn't happen, and it just shits the bed, right? And it makes its move down.
Yeah.
Now, remember what I'm always talking about is once you get a move down, right? This is a sideways move, right? Now, what happens here is this. There's always, that's why rushing into a trade doesn't matter, right? Because remember, we're not trying to get the maximum out the trade. What we're trying to do is get the trade that we are successful, which is our 1% move, our 2%, whatever it is, right? So let's say that after this trade here falls down, bounces, and I miss all those. And then it just goes in and it has this huge dump and it goes boom, right? That's where I go, okay, I'm buying the bounce because that's wave 1. Now I get in anywhere from here, here, and I get wave 3. Why? Because wave 3 wave 3 is going to do 2 things. One, it's normally going to always do a double top, but on a shorts, basically once something starts falling, your hands take over. So more than likely, it's always going to be twice as big as the first move. So you can measure here. This is the first move down before it dumps, right? This first dump goes down 2.7, which means when it bounces, I can expect the same relative move on the second move. See?
Yeah.
Now, I'm not going to be that greedy. I'm going to say, okay, what's my move? 2.73, 3%. I'm going to go to 1.5 right there. That's a beautiful move. I'm going to run my 40X. Boom, I get 40. That's 60% gains. What do? I put my stop loss at 50% and I target the rest of that move. And I say, I'm going to go for that 2.5 right there. Call it a day, even though I'm expecting, a 3.
Right.
And I let it run. But you see how by having that move, I'm trying to catch the sideways move. If I miss it and it dumps, I catch the wave 2 bounce. Then I get in on wave 3, which is normally the same size as wave 1 and normally twice as big. So now I have wave.
So correct me.
Go ahead.
So correct me if I'm wrong. If I'm watching it do basically do the sideways movements, which is what happened, and I wait for my first big dump. Now that's wave
1.
1 is the dump. Now I'm looking for it to go up. So even if I would have bought in right where the first green candle goes up or whatever after that, the first dump of the red arrow you have pointing down.
Yeah.
Even if I got in at that red where it starts to like just little do something and then it goes green again, even if I bought in there, I still would have been safe.
Yeah.
Yeah, I got you.
So that's why when you understand the trades that are coming and you're operating with the steps, right? Remember, this all happens because we see a 1 hour pullback, right? Which you can short the 1 hour pullback. Just expect a 0.5% move. The second time it happens, you expect a little bit more, right? This guy survives this, depends on how it is. Once that happens, and let's say you don't get this trade, then the third time it happens, which is this blue box here, now we're in this zone here where now we're trading into the next 1 hour pullback. And now we have where it's like, all right, our 1 hour pullbacks are really kind of like piecing together, right? Now let me pull this out here, and what I want to see is this is everything just being built on the 1 hour moves. Let me click without kind of like putting in the 4 hour option, right? So when we add skill level, then we start, saying more confirmation, right? This is where if you add your 4 hours, this just means that this 4 hour box here would have been confirmation that the short is it the right decision. But the 1 hours, we're doing a 1 hour pullback, right? So we're already in a good position there on the pullback. So the 4 hour just lets you know that, oh, yeah, I got my 4 hour down too. So I could probably expect a pretty good pullback. That's how you can give yourself the knowledge of, with the 4 hour pullback happening in this zone, these two zones here, these 1 hour pullbacks are going to give me more than I seen the first time I seen the 1 hour pullback. This first blue box here, when you got this pullback here, it was a smaller pullback because there was no red, the 4 hour zone wasn't going down here, right? Here, I've got the 4 hour zone going down here. So I have confirmation that when I do catch this short that's happening here, it also happens to be in the 4 hour down. Now, normally, this is the key to remember, is when something starts to make a move, it normally takes time before it makes its decision, right? So just because the 4 hour is heading down, that gives you a ton of time to find the right entries and then wait for the tail end of it, right? Like a snowball, it has to build momentum, right? So it dumps, it dumps, it dumps, and then exhaustion, boom, boom. You see what I'm saying? So once you're kind of in that mentality of just understanding, the steps of what you're looking for from a trade, right? That's where you start to, when you start piecing your strategy together, you're also remembering what everyone else in the world is doing, right? You want to catch the third move. You want to catching the move on this box here and setting up early. That's just skill level. Getting into an entry on this beginning of this next 1 hour short, that's just skill level, right? This is just a strategy. You trade against the 1 hour down, 1 hour down, right? Now the reality is the 1 hour down, depending on how you build your skill level, right? So if let's say you have a 1 hour down and you constantly, all you do is when the 1 hour starts to go down, you play the short, right? No skill level. You're just a RSI guy. The 1 hour RSI starts to go down. You you look for a top entry, and then you trade 60x leverage, and you aim for a 0.5% move. You're probably going to be successful 7 out of 10 times. And you have no extra skill level. That's just winging it. And like, go look at that trade. Go to the 1 hour RSI. When it breaks down, it shows a down move. Go to the 10-minute, buy a top of any of the top candles, and see if you can get a 0.5% move down. If you did a 60x leverage, you would, and then mark off, say, okay, let's say, fuck it, I'm doing $1,000 trade. That means I could only lose, my average win here is going to be 30%, which means I'm going to win $300. So that means I only want to give up 150 on my losses because I figure I'm going to break even here. So that means is
Mhm.
when you do a 60x leverage, if you're doing a 1% pullback, that's going to be 60 to 600. You're only allowed a 0.5% pullback on a 60x leverage. A 0.5% is going to be 30%. It's going to be 300. So you're only allowed a 0.25 pullback, right?
Right.
So when you go look at that trade, right? I'll show you kind of what I mean here is, let's go to the 10-minute. This is with no extra skill levels. This is just a normal guy. All he's doing is when he gets a 1 hour down, right? A 1 hour RSI, right? We used to teach this. This is the academy trade, okay? Very simple. 1 hour starts to head down. See that blue box? I go to my 10-minute. On my 10-minute, I wait for a bounce, a spike, right? So I have a very simple. If I'm looking at my 10-minute, I can see that I have entries on these spikes, right? I have my tops here. So here's my first top, and I have my second peek through top. So once I get the 1 hour down, I simply go to my entry point and say, this is my entry. If I don't get that entry, then I go to the next entry there. And if I miss that entry, then I'm sliding down to the top of this next candle, right? And you can see here, I get those entries, right? Here's a spike. Let's say that spike doesn't happen and it goes there. My entry is based on the body of this candle here. So here's two entries, the wick of this candle and the body of that candle. Those are my two entries. Do they pay off?
Yeah.
You get one. Yeah, you what? Get one trade.
Yeah, I get it. Now, all I have to do here is let's measure this out. So based on how we do this trade, let's go short position. We get in here. The ideal is I'm only allowed a 0.25 pullback. Which is here. And my entry is I'm looking for a 0.5% move, right? Up to a 1% for my target. So there's my maximum target here. So this trade, just by taking the move down, right? The only thing I have to do here is if I'm doing this trade is I just have to wait for the candles on my 10 minutes to go red. So my entry point is here, okay? All I'm waiting for is a red candle, right? So what happens is I get this giant spike here. Now, I can see it pulls down. My next candle jumps up, starts to go red. When that goes red, I see a giant move down. You see that big wick down?
Yep.
When that pulls up, right, that's where I take my entry right in there. Let's say I miss that and I get the next entry, I get it here, right? Either way, all I waited for was the red to start coming. And let's say that that's my entry and I go to here. My stop loss becomes here, right? Let's get rid of this. Now, do I get wicked out of this trade from here to here? No, I survive. Do I get my 1% move from here to here? Yes. So there's my 60% trade. So this is with no real skill level. This is just an RSI trade waiting for the red to come in on the 10-minute, right? Can I protect myself more by increasing my skills? Yes. Could I get a better entry than this by making my skills? Yes. Right? But I don't need a lot of skill level to make this trade. That's just a 1 hour pullback using the 10-minute entry, right? If you do this 1 hour move, right? The same scenario, you're going to be successful probably 5 out of 10 times, probably more than that. That's probably the low average. But if I'm winning 60%, which is 600 on my 1,000, but I'm only risking here. I remember because a 0.5% here would be 300. So here I'm only risking 150, but I'm making 650 or 600. You know what I'm saying? I'm 3-1 here.
Yeah, that's what we were talking about yesterday.
Yeah, this is a massive, simple trade, right? Like I said, in Trading 102, we don't really go over how to do a trade right now, because once you have to kind of build from what you understand. Once you understand the principles of what you're trying to accomplish, the rules that you have to set for yourself, the boundaries. Once you create a trade structure, then you start creating trade strategies. Then down the road, once you have built a trader mentality, you can look at the Trading 102 trades, because then you'll be able to create your trade based on your skill level, right? So let's rinse and repeat this. Let's say that we go back and let's say, oh, here's our trigger, the 1 hour down, right? Same scenario. When the trigger happens, we look for the 1 hour down. All we're looking for here is the bounce. So once we get a 1 hour down, we need a bounce, right? Once it bounces, we look for the red candle. Here it is again. That's our entry right there. Now, if we do the same scenario, we drag this over here, we get into this trade here, we're going to have the same plot twist, right? Here's our 1 hour down. We get a pull down. It bounces, okay? Once it bounces, we look for the next red candle, which is here. This is going to basically pull up. It's going to give us an entry somewhere in this point here, somewhere around here, depending, like I said, it's all skill level, but we're going to end up somewhere on this red candle. It's going to show us red. We're probably going to get somewhere in here, right? Now, based on skill level, this is where the skill and the difference of this comes in, right? Here's your stop loss, right? Here's our entry. Actually, I don't need that there. I need that here. So if I'm smart, I look at these top candles and I say that's probably where I want to make sure my stop loss is, and set my entry or my stop loss from that level. Let's say I don't even have that skill level, right? And I'm just like, okay, red candle, here we go. It pulls back. It starts an entry. Bada boom, bada bing. I make a decision. I'm somewhere in on this candle, right? So all that is let's move that there to there. And now my stop loss that I enter is right here. Okay. Now my 1% move, or my target, or my entry that I'm trying to get to, is basically 1%, which is here. There's my winning target right there. Now, here's my entry. Do I hit my stop loss? No, I barely survive.
I was going to say, yeah.
But do I get to my target?
Yeah, I guess you wicked it.
Yeah, I wicked it right there. See what I'm saying?
Yeah.
And that's what, like I said, there's no skill level here, right? You can always improve this trade. This is just a strategy. 1 hour down, 10-minute red candle, right? Now, can we make this entry better? Hell yes. Can we ensure that our targets are successful? Hell yes, right? It's the same scenario. Here we go again, right? We go in the same scenario here, right? Where we get the 1 hour down, right? We look for a push up. This falls down, get a little bump. We're looking for a push up. This normally would be considered the push up move, right? So we would see that push up here, and we would say, oh, there's a red candle. We're getting somewhere here. We lose this trade.
Right.
Now, we lose that trade and we come back and we go, well, it's got to come down here. We get this big push up here. The second candles, we get a red candle. We enter here. This is our second go at this trade, because we're still in the down. So now once we piece this all together.
You're into what, the second top wick? second wick.
Because I'm not giving up on my
Okay.
1 hour pullback because it's still
Mhm.
heading down. All that happened here
Gotcha.
was because of my skill level, I didn't avoid this push or I didn't look for it, right? Remember, all I'm doing here is I got a simple trade, right? My simple trade is this.
Mhm.
There's going to be a 2 hour down. I look for a jump. This falls without jumping. You see, there's no jump here. So
Right.
I wait for a jump.
Mhm.
My skill level says that this is a jump. So what happens is, based on this wick here, I decide to go on this next red candle, which puts me here.
Mhm.
I lose this trade. Once I
Mhm.
lose that trade, I'm like, oh, this thing jumped on me. But I still know I'm in a downward move because I'm in the 1 hour down. So now this
Mhm.
becomes my new wick, my new top. I see it goes green again. I get a red candle. I enter here. Now, based on that, this gives me my entry somewhere across here. We'll make that white. Now, this becomes my entry. Here's my stop loss pullback. And then I need a 1% target. This is green. So here we go. So I
Mhm.
enter here. Do I hit my stop loss? No. I survive. Do I get to my winning target? Yes.
Yep.
Now, that's just because. So here we go. Rinse and repeat. The 1 hour down, successful. The 1 hour down, successful. The 1 hour down, lost. Followed it up because it jumped on me. I grabbed the next enter. I wrote it out, successful. So far, I'm 1, 2, I'm 3 out of 4.
3 to 1. Yeah.
Right? Now I roll again. I get my target, it wins. My skill level doesn't teach me that these trades are going to happen because I've already got into my
Mhm.
trade, right? So I just move on to my next day. What's my next day? That's just the next time the blue goes, I get a blue box somewhere down here, right? But that's just showing you that if you have a strategy, right, without the skill levels, you're still going if you're winning 3 out of 5, right? And you are
Mhm.
using the structure of lose half of what I averagely win. If these wins are 600 out of 1,000, I'm allowed to lose 300 a trade. So if you calculate all that in, you are going to win these trades, and even when you lose them, you are still going to double your money every 10 trades. No skill level, just a simple philosophy, right? I used to teach this in 2021. We taught the RSI. All we traded was the RSI, right? Because you
Uh-huh.
don't have to really think about it. Now it's, as your skill levels get better, you can get to where, because I was like, why win 3 out of 5 when you can win 8 out of 10, right?
Right.
That's where you start adding add this level, add this trade zone, add this, add that. But what I realized was you cannot teach people all the extra steps if they can't comprehend them. So that's why
Right.
we went all the way back to just simplicity. And what's simplicity? Simplicity was like, all right, the RSI and the moon indicator. That's it. And now we're at the point where the only thing we're really pulling in is the moon indicator, right? Let me show you how the moon indicator works. So once you have a push, right? You see this, here's green, right? You got your push up, right? It breaks up, shows volume, you look for a push. There's a big pullback down, you look for that big push. Once this big push hits, right? It's going to pull down and give you a short. Your next short is going to be on that next hill here. That's your third down, right? So if I did it based on the moon indicator, it would look like this. It would expect the big push. There's a drop, which would be, this would be the blue moon. So here's the first blue moon down. I'm gonna turn this orange. There's your first blue moon down. We would expect a bounce because wave one, right? First move down, second move. Here's your second blue moon right here. Okay. On the second blue moon, that is your short position there, right?
Mm-hmm.
When that position happens, you're trading down into the downtrend side. And then you have the next time, which is the next blue moon here, which is where a lot of times we talk about the confirmation of a blue moon, right? So now let's go here. You can see blue moon, first blue moon after the big push. There's your short. Second blue moon after the bounce. Here's your orange short. And then you have a reset of the green back into the next blue moon here. So this is just shorting blue moon. So now let's just take a look at this. So now if you were going to come over here and you were going to short and use the blue moon, here's your blue moon popping up here, meaning that your entry would be here. See? You'd be entering on this next candle here, somewhere in here. You're successful, you don't hit. You go to your next one. Here's where you get your blue moon again, except you get it here. So once you get your blue moon, this is where you would be getting into your entries, right? You'd be picking your entries again in these sections here. So this is your entry point would be here across, right? Let's see here. So when we drag it across, we can see our blue moon entry basically becomes this entry here. So anywhere down these rows, you would be looking for your blue moon entries there. So that would be your entry across this side here. Now, if you lose this trade because you spiked, then all that would happen is once it went down below again, you would set your blue moon entry again here. Because what
say that one more time.
Okay, so your blue moon entry would have been somewhere off of here, right? When it bounced against you, more than likely, you probably would have lost this trade because it ripped up here. Now, if I measure this, this is not probably going to be a 1% move here. Let me see. Yeah. Oh, actually, you know what? You're successful. So if you got your blue moon trade here, you got into here either whether you're down here, a worse scenario, and you entered here. At the end of the day, you hit your 1%. So you actually won this trade. So from here to here is a 1% move. So there's your blue moon win. Let's say that you didn't get that win. Let's say you take that loss. It jumps up on you and comes back up. After it spikes, right, it pushes up. It's going to start to come back down. Once it goes below your blue moon entry, right, you would reset your entry up here. And you would re-go again. Now you'd get you in a position here where you're looking for your trade again, which is on the downside in here. Now, a lot of times when you get your blue moon, you don't do a double trade. You take that first trade. If it doesn't hit, you just move on with your life, right? You wait for the next one. So this one was successful. It did win, but depending on how you got in that trade, once again, it's still leverage and all that. Here we go again. Here's your blue moon. You get in over here. You can get in on that candle, whatever it is. It puts you in a blue moon entry, and you get that same pullback here, right? So that's where it's like, as you start to, use volume and you start to piece these things together, you can get these moves in here, right? This is with no skill, no extra anything to it. This is just kind of like piecing together the basics of the blue moons. Like, oh, here's my blue moon short. Okay, here's my, here's my blue moon, here's my blue moon, here's my blue moon, right? When you piece them together, right? That's why I said the moon indicator is confirmation for any trade you come up with. So once you decide on how you're going to make a trade or do a trade, the moon just tells you whether you're right. So now let's look at it that way. You look for a 1 hour pullback, which is here, right? Your confirmation is your blue moon. See the orange? Now that the blue moon hit, you say, oh, confirmation, because it's going to be blinking. Remember, when we'll swing it around. I got to get the alerts back through for you guys. When the blue moon starts kind of like flickering, you're going to see that. Now you know you have confirmation that this 1 hour RSI is actually a good situation. So you get into that trade. Same scenario over here. When you get the blue, here's your 1 hour pullback, right? It's showing up right here. You're waiting for the blue moon. Notice here that blue moon is pretty much in this scenario already established in here, saying, okay, you're in a downward motion. So once you get this blue, you get your 1 hour down, the blue moon's already in here. So you can say, oh, okay, I'm in a pretty good situation here. So I'm going to wait for is I'm going to get my trade, and you execute it because you're already in a blue moon situation. It's confirming that what you're thinking is already happening. There's a blue moon here, so you should be getting a downward trade anyways. It's just confirmation to the trade that you're doing. So that's what I say, like, once you start to develop your trade and you start to piece it in there, the skill levels and how you build it are going to be the extra pieces to understanding, right? The rest of it is just understanding basics, right? When you see those moves, you wait for that move to happen, the double move, then you're getting into that big pullback, right? You're never missing a trade. Even though this trade looks like a huge dump, what happened? There's a bounce. Once the bounce happened, guess what? You took advantage of the third wave, right?
Yeah.
You're always, the more kind of think it like this. The leverage is there to make up for the patience. If you try to get in early and you're trying to get in over here, a lot of times if you're waiting for this big pullback, you want to use lower leverage in these areas up here because more than likely you're going to be fighting the trend more, right? So lower leverage in this area up here will sustain you to the bigger move. Where patience is, if you're catching these tops and you're like, oh, here's a top, I'm going to try to catch that top. Okay, I missed that top. Oh, I caught this top. Then the leverage that you're using can go from a 20x, right? It should be a 40x on a short anyways, but you can go 40x here. Once you see that big dump that happens and it bounces, you now have confirmation that the dump is here, the bounce is in, and now the next move is going to be even bigger. You can go from a 40x to a 60 because you've waited. So what you're making up for is not, instead of getting this entry up here, you are now adding 10 or 15, 20% leverage to that second move because you're in the more of a, you've already had confirmation of the move, right? So that's how you can increase gains and stuff like that. But at the end of the day, if you just build a strategy where you don't even worry about it, because if this move does what it's supposed to do, you only need a 1% move at a 20x to get your 20%. It's probably going to go 40 to 60 anyways. So you don't need to increase the 40x or the 20x short because it's already built in, right? Your job is just to execute the trade. But I know in human nature, a lot of times the ideal is to increase the leverage too early. If you increase leverage, you need to increase it later after multiple confirmations. But the reality is, if you build a trade that is designed to hit a target without having to use 60% leverage, staying at the 40 short leverage, you will be all right. Just like on a long, you should be able to hit your 20x to 30x long without having to do 40 or 50, right? When you build that trade on a 20 or 30x leverage, then you don't need a 40 or 50 because that trade is consistently successful with the lower leverage. When you increase leverage, you increase risk, right? Instead of increasing leverage, what you need to do is say, well, how are my entries? I've noticed that my entry, I've always pulled back 0.3 or 0.5, a half a percent. Maybe I should just get a better entry to where my entries don't pull back so far, where my entries only go back 0.25, right? Where your entries when you get good should only pull back 0.1%. Like that should be the normal pullback, right? That's why we teach you to aim for these higher supports and resistance, because if they don't hit, you're just not in the trade. But you don't have to worry about the opposite effect of being in too early and getting stop lossed out, right? Because the reality is, if your entry's better, then you see how the entry down here, I had a target way down here. I needed it to go to here, but if my entry was better, where did I need it to go? Way up here.
Yeah.
All right, that's the key. That's why trading 102 is reverse. Don't worry about the target, right? Reaching the maximum, the top, the resistance, the support. Fix your entry. That it gives you you win by having the best entry, not the best movement, right? That's where the win is. The win is on the entry. So that's kind of where I wanted to break down, as you kind of break through this. All these boxes and all these extra time frames, they're just skill levels that you can add. But that's why I also showed you don't have to overthink this. You can do the 1 hour pullback without any of that other information. Like you can do a 1 hour pullback every single time, and you'll be successful 6 out of 10. And all you have to do is win twice as much as you lose. So just fix your stop loss and your win structure to that scenario, and your 1 hour pullback will win even when the odds are against it. You know what I mean? That's the
beauty. So the 1 hour pullback is like rolling into your shop with a stock car, and everything else you're just adding modifications to it, souping it up.
Yeah, just get your skill level,
right?
The goal is this: there's a 1 hour pullback. That's how you do shorts. Now your skill level is going to be the ability to read when there's the 4 hour and the daily with you, knowing that there's more momentum to the downside. The other skill level, the very first skill level, is to realize when the 1 hour pullback is the first pullback and you need to get the third wave, right? By having the skill level of realizing you need to see a move, you need to wait for the bounce, or what could affect you, which is go against you, which is the next upward move. And after that move is out, then you enter. That's a skill level. That's a skill level of patience. Wait for a move, look for the things that would wipe you out, and then get in on the next move down. Skill level, right? How do you find that? What do you use to determine that? Do you use resistance, higher resistance? Or if you're going long, are you using support or lower support to decide where you're entering on a long, right? It's all skill level of learning how to read the chart, and then just making the decision to be greedy on the entries, and then also not jumping a trade, right? It's just steps that you put in for yourself to make the car more modified. You know what I mean?
Yeah.
Hopping in there. Do you like seats or bucket seats? Right? Being patient, right? This is all just skill level. So first thing you start off with this simple concept. So this is just for you guys for shorts. The 1 hour pullback is a very simple short to do, right? What we do next is we wait for the ability to catch the 1 hour pullback, right? And then is it on the first wave, second wave, or third, right? Is it with the 4 hour down with me, right? Simple little things to kind of like improve your ability to be successful. But on the 1 hour pullback, if you just looked at the 1 hour and every time the 1 hour started down, you went and said, if I did a short here, how would I do it? And you put your supports or you put your resistance and then your highest resistance, and you decide where your entry is, and then you map out, if I did $1,000 trade and I'm only allowed to lose, my win here would be $600 or 60%. I'm doing a 40x. I'm going for 40%. So my win would be 1% move. I'm looking for $400. Worst case scenario, I take 200, which means I'm only allowed to lose 100. So if I set this trade up with a $100 loss package, and how would I put my entry here? And then look how you build your entry, and then see what happens. See if you were right. So you know what? I missed that resistance line. maybe that resistance was higher, right? So just kind of like give you an example. If I was doing my 1 hour here and I say, oh, the 1 hour is heading down, which is right here. First thing I need to do is find a resistance line, right? Which is this. I go, at this point, this is my top resistance. That's that top arrow. My 1 hour is starting to go down based off this candle here, right? There we go. That's my 1 hour. Here's my top resistance. Is there anything other wicks that I can see over here that were a little bit higher, right? I can scroll. I can see that's about average. See that?
Yeah.
That's about average. Now there's a higher one, which is here. So now I go back over here and I go up. Looking back a little bit further, here's my current resistance. But I do see that I have a top resistance of here, right? So now if I'm making this trade, I have my resistance, I have my area that I want to get into. I would say, okay, this would be the highest resistance of the trade would be here. So that would be my top entry point. I've got my line here. This is where I'm starting. And then all you have to do is look at your trade. All I want to do is make sure that there's some type of pump there. And I'm aware of the pump that's happening, right? Or skill level side, you see this big arrow jump up, it starts to come down. You go, well, you know what? That was a big spike. I'm jumping in there. Or you wait for the red candle to come, which is here. And then you buy into that red candle piece. And you jump into this candle here. Right? So this is all you do is, and then you just measure it out and then see how it did. Start the steps that you would decide here. Like I said, this is simply waiting for a spike, then on the next candle, catching the top of that next candle. That is basically the simplest way to make this trade. The other option is the trade has a move, which is this move here. Then you buy the top.
Yep. Yeah.
So these are the two entries that you have choices on. Now, the other thing is you measure out the success, right? Don't worry about if you got this trade, right? We're doing a $1,000 trade. I'm allowed to lose $100, so I need a 0.25. There we go. Let's say you give yourself a little room, say 150, right? So you go to 0.3. There's my stop loss. So if I got that, I did that trade right there. Successful. It looks gravy. Let me see if I was successful. Perfect. That trade was awesome. So if I did this one and I caught it and I was awesome, I did it. Did I hit my 1% down from that level? I'm going for my 40x. A little bit high, but that's fine. Something like that. Okay. So did I get my target from there to there? Yes. Success. Now let's move to the next one. Let's say that I let the trade come down. It bounced. I got this entry here. Let's go measure that out. Was that successful? Here's my stop loss here. I didn't hit it there. I was successful. Did I hit my target? I did. Whoop-de-doo. 2 successful trades, right? Now I let that happen again. Same scenario. What do I get? Here's my blue box down right here. I do the same thing, right? These are steps, right? So all I'm going to do is when I get my blue, I wait for a pump, right? It's kind of how we're just, remember, you're building a trade, right? So here's my 2 hour. I wait for a pump. Here's the pump. Bada boom, bada bing, right? I look for my previous resistance, which is there. You see this wick here? That's my previous, and I have this one. So that's what I'm really worried about is going back to there. I see this pump happen. It doesn't touch it. It goes down. I wait for red. I don't get it, right? Because this is all going to be entry. So let's say you get that pump and you decide that on that pump you get into that next candle. So let's say somewhere in here you get this candle here, right? Because you're not perfect. You're just doing the same steps. The step is to wait for a pump, and on the next candle, try to buy the top of the next candle, which would be somewhere here. So if I did that, that puts me here, or even let's say the middle of that candle puts me there. Now, does my stop loss survive? Let's say I got a bad entry, right? Here's my stop loss from here to here. Do I survive that stop loss? Yes. The question is, do I hit my entry or my target? Yes. Now, what I want to do is repeat what I did. What I did was wait for the 1 hour down. I wait for a big green pump, right? A big spike, right? Any of these could be considered spikes. Then I get, so this is here's my 1 hour down, here's a spike, right? I could get in on the next candle, would have put me somewhere around here, okay? Here, here, right? Any of these basically would have been entries on this candle. If I got lucky, I got in up here, right? But we don't want to talk about the best entry. We want to talk about reality. You're probably going to get in somewhere around here, right? Let's say that next spike happens. It doesn't take me out because my stop loss is up here. So at the end of the day, I still don't hit my stop loss here and I don't hit it here. So if I thought this was the spike and I got in on this candle, success. If I waited for this spike and I said, oh, there's a big green spike, and I got on this candle, guess what? Success. So the steps that I'm taking, the 1 hour goes down. I look for a spike, whether it's this one and I decide to enter on this candle, or it's this one and I decide to enter on this candle, or it's this one and I decide to enter on this candle, right? Any of those scenarios or any of those candles I enter, all of these entries were successful. Whether I decided that this was the entry that I was going to get into because I thought that first candle was the spike, or I see the next one and I decide that this candle is a spike, enter here, spike, enter here. It doesn't matter. Any of these entries that I would have chose here, all three of them were successful. Okay? All I did was 1 hour headed down. I waited for a spike. I got in on the next candle. That's it. Success, right? Rinse and repeat. That's how simple that is. I'm doing a 0.3 pullback, a 1% target. I'm asking for 40% leverage. And that's my target. I'm going for, and this is a 40% gain, right? Remember, that's 400. Remember, we're looking for a 20 to 40%. So in reality, we're taking profits somewhere around here, right? So we're getting the middle term, which is 20%, which is our 200 on our 1,000, up to our 400 on our 1,000. But either way, we're going to walk away with an average of 100 or 300, and we're risking on our risk here. We're risking 150, right? So we're averaging 300. Now the blue box, we come to the same scenarios again. The blue box happens again here. I wait for a spike. I don't get my spike. It goes down, and I don't see a spike until here. So once I see this spike, if I consider this the spike, then I enter here. If I don't consider that's a spike and I consider this a spike, then I enter here. Okay? Either way, I'm following the same steps that I did before. Now, if I bring my 3%er over here, we can see the same scenario as before. Depending on whatever one of these entries happened, I would have lost the trade because we had a major spike here. Now, how do we avoid this major spike? Skill level, which is something we can break this trade down 100 different ways, find why it did that, or how to find a better entry point. Either way, it doesn't matter. I'm 2 out of 3, and all that happens is when this spike happens, what do? I go for my next entry, which is on this candle. I enter here. Now, am I successful if I enter there? Yes. I don't hit my stop loss, and I hit my 30 to 40%, right? I'm supposed to lose. I'm expected to lose 5 out. If I'm breaking even, if I win 5, lose 5, I'm winning $300 to $400, but I'm only losing 150. So if worst case scenario, I only averaged $300 on my 5 wins, I only lost 150 on my losses. I'm up $150 on my trades. I'm 2 to 1, right? So worst case scenario, this shorting system right here, the 102 shorting strategy without all the extra things that we do, is a successful way to do pullback trades just based off the 1 hour. So this is something we'll cover again and go over again so that you can kind of see. Now, as your skill level improves, you will basically, instead of just making $300, you will hit these trades. You will make $600 to $800 on your trade.
Mm-hmm.
But your losses will still stay at 150. So instead of doubling your money at the end of 10 trades, you will 4 to 6x your money. But it's not then we haven't upped our leverage. We haven't done anything. The only thing we've done was learned how to find the longer trades, learn how to enter better, and that's it. Because the strategy is a 1 hour pullback with a 40x leverage. Gives us a 0.3 stop loss at $150, $1,000 trade with a 30 to 40% target where we take in $300 to $400 a trade. That's it. Now your skill level and your ability to process or add more dimensions to this will simply improve your entries, simply improve your gains. But the bottom line is, if you're at the lowest skill level possible, doing this trade, you are going to win 6 out of 10. You will win $300 6 times. You will lose 154 times. So every 10 trades, you are making $600. And you are the lowest skill level of this.
Bare bones.
You're bare bones. But by understanding how to have a trade structure to lose half of what you averagely win, you are a profitable trader. That's all that matters. The only thing we're here to do is win more than we lose. You don't need a fancy strategy to do that. You just need to understand what you averagely win, how to create that, and then you know how much you can lose, and then you play the game the way you're supposed to play. As you get better, injuries get better, which means profits get bigger. You don't change anything from there. You don't change your leverage. You don't change your stop loss. If you want to make more money, you're trading $1,000 and you say, you know what, I need to make more money. Once you've got your average wins down and your consistency data, then trade 3,000. You want more money? Make it 6. And that's it. And that's where we are right now, is building this simple understanding of the game that you're playing. It's not hard. The only thing that matters is win twice as much as you lose. Build a trade that helps you win twice as much as you lose. Find a strategy that wins twice as much as you lose. Use leverage up and down until you find the number that helps you win twice as much as you lose. Fix your entries so that you win twice as much as you lose. And that's it.
Yeah.
That's all. All this other stuff that people do, they're fucking their own percentages up. You can't maintain that consistency. That's why trading is systematic, right? Systems succeed, people fail. Why do people fail? Why do systems succeed? Systems repeat the same process over and over and get the same data over and over. And once you fix a system to get positive results, it just delivers positive results. The person who changes the way they do it, how they enter, leverage, money, they are the ones who are changing all the parameters of the system, and that's why the results are always different. Right? You have to stay in the same system and then use mathematics to make it your favor. What do you need to use mathematics for? to make sure that you're winning more than you lose. That is it. And at first, you start off to where you just want to win twice as much as you lose. And eventually, you turn that into you win 3 times more than you lose. And there you go. Then you just add more money and you increase the gains by increasing the bag. That is the entire system. There's nothing else to it. Everyone just overthinks it. And then
Guilty.
they start making changes and doing other things that are like not mathematical probable, right? You want to have the
Guilty.
lowest risk. Make sense?
Yeah.
So
Yeah, I have a much better understanding tonight. The whole, I don't know why until tonight did it click, the whole the 4 hour and the daily and all that. I'm thinking like you always say the data and it didn't click. I'm thinking you're talking about putting in a trade that's gonna I'm gonna put in a trade today and I'm not gonna cash it out till 3 or 4 weeks. I'm like, I couldn't wrap my head around it.
Yeah. Nah, data.
That's what I kept hearing. That's what I kept hearing in the beginning.
Yeah.
It's like this. I'm like, nah, man, I need more action than that. That shit's boring.
Yeah, and that's why it's now in the Trading 102 course, the information is just always about the foundation, right? The boundaries, the rules of the game, right? No matter what you do, it's the rule. You ever play Call of Duty? You ever play video games like that?
No.
Okay. So in every game or any video game you play, there's rules in the game. And that's just the boundaries. And once you understand the boundaries, you know what you need to do. It's like anything that you do, it's like it's like any sport you play. You might not be the greatest at where you're at, but there's other people that do something better. And it's like when you're a coach, you put the kids that do something better in the places that they'll do better. And the kids who do other things better, you put them there. And that's it. Now, you might not have better athletes than the other team, but if your guys are playing their position and they're not, the other team isn't, you have a chance with doing things right to be successful. So in trading, the very first thing that you really have to understand, the rule of trading, right? It's kind of like universal laws. You know what I mean? Like, you ever heard of universal laws, right?
Yeah.
So universal laws are what called we have a thing called the law of percentage, right? The law of average, which just means like if you flip a coin X amount of times, it will give you heads slightly more than it gives you tails. And it doesn't matter if you flip it 100, 1,000, 10,000, you will see that percentage stay the same. That's a universal law, right?
Right.
In trading, the universal law of trading is real simple. You must win more than you lose to be profitable. It sounds dumb when you say it because everyone's like, yeah, no shit. Like what? But
yeah, but you write it out on paper.
Yeah, but
it
you
looks
have to
totally different than it
understand
sounds.
what that really means. It's like when you play basketball, like, hey man, you got to outscore the other team. Yeah, no shit. Fundamentally, you get it, right? But when you're in the game and you're shooting fadeaway jump shots and you're like, bro, that's not your skill. So we're never going to win, even if you're shooting 100 shots, bro. That's not the fade. You don't shoot fadeaways, dude, right? It's like you have to understand that it's like the principle and the rule is so stupid to sound and say that people disregard what it actually means, right? It's very simple. You have to win more than you lose. And everyone's like, yeah. That's how you win. Yeah. No, you're missing the point. This isn't a suggestion. This isn't just a goal. You have to build your very first day. You have to build a systematic structure that is designed so that you win more than you lose. You have to create rules, boundaries, steps that you win more than you lose. Before you do anything else, you have to follow these rules and parameters. You have to build them so that you don't fall off the racetrack, so you don't fall off the bridge, you don't fall off the wagon. Okay? You have to have these in space. So that's why we have the build your structure. If you are trading and we don't even need to decide, do you suck or you don't. We have 100 years of data, and now with AI, you can fucking Google what is the winning percentage out of 10 trades retail and professional traders win, and it will say that professionals win 4 to 5 trades out of 10. Retail wins 5 to 6 out of 10. Basically, what that means is whether you just started, just got in here, don't know what's going on, just winging it, you are going to have an average win percent of 5 out of 10. Now, you cut that down and say, okay, I don't know jack shit, so I'm going to say I'm probably going to win 3 out of 10. And that's where you start. Now you say to yourself, okay, if I'm going to win 3 and lose 7, what does that mean? Or win 3 and lose 6, what does that mean? That means you're going to win half of the times that you lose. What does that mean? That means if you win $1 3 times, that's $3. But if you lose 6 times, how much can you actually lose per loss? Well, if I want to win twice as much as I lose, that means I have to take my winning of $1 3 times, $3, cut that in half, which means I'm willing to lose $1.50, and then divide that by 6. That means those 6 trades are only allowed to lose 37 cents each. Because you only win $1 when you win. That's how you start your day. Once you know what you're allowed to lose, you don't break that rule. It's like, damn, I'm going to mess up 6 times out of the next 10, and I'm only allowed to lose 40 cents. That's it. You don't lose 50 cents. You don't lose 60 cents. You set your stop loss at 40 cents because that's the rule. Why is that your rule? Because when you win, you only win $1. And if you're only winning 3 times, you have to understand you're only allowed to lose $1.50. And that's based off of 6 losses. 6 divided by $1.50. That's how you get your money. Right? 30 cents. That's all you're allowed to lose. Now, once you make 5 trades and you see your wins, did you win 2 out of 5? Did you win 3 out of 5? And then see your next 5. If you realize that you're better than your 3 and you're more of a 4 out of 10 guy, then you go like, oh, you could adjust your number a little bit. And as time goes on, you'll realize that you're a 5 out of 5, which is the average for everybody. Which means if you win $1 every single time you trade and 5 wins brings $5, that means when you lose, you can only lose 50 cents 5 times. So once you have these rules, it doesn't matter as you go along. If you win your 5 and you make $5, and when you lose 50 cents and you lose $2.50, at the end of the 10 trades, you've made $2.50. That's where you're at. That is who you are. But the bottom line is, while you're doing this, you are winning twice as much as you're losing. You are a profitable trader. That is how simple this fucking game is. Now, if you wanted to make more than $2.50, then you would just double your money, 10x your money, and that $2.50 would become $22 or $250, right? And you haven't done shit. You haven't got better. You haven't done any skill upgrades. You're still losing 5 trades and you're still winning 5 fucking trades. But you've learned how to win twice as much as you lose, and you can become a profitable trader. That's how easy this shit is.
Yeah.
That's what's so crazy about it, when you really just understand the rule of this game. win twice as much as you lose. That's it.
Yep.
That's why sometimes
and then execute.
Yeah, sometimes I sit around like, how the fuck are you guys losing? Like, but I realize that nobody ever really just breaks down the rule. The only rule that matters. Lose half of what you win. Now, once you have that in place and you start to learn to trade, learn to find systems and strategies that help you find good trades. And when you find good trades, guess what? Your wins will go up. Then once you figure out how to enter better, guess what? Your gains will go up. And you will no longer be the guy who's winning twice as much as he loses. You will be the guy who wins 3 to 4 times more than he loses. That's it. But you should never lose this game. That is why people play the game so much. It's not if everyone started trading, and every fucking time someone made a trade, right? Let's say you started off, you made a trade, and let's say you're just going balls out, $100, and boom, you lost $50. $100 and you lost 50. $100 and you lost 50. $100 you lost 50. $100 lost 50. $100 lost 50. You're like, man, this is a fucked up game. $100 won 100. Oh, finally. $100 lost 50. Fuck. I ain't playing this shit. You leave. But here's how the game goes. Put in 100. Oh shit, I won 50. Put in 100. Holy shit, I won 100. Put in 100. Fuck, I won another 50. Put in 100. I lost 50. Fuck it. Put in 100. Won another 50. Put in 100. Lose 50. Put in 100. Lose 50. Put in 100. Win 100. This shit is great. Because you win more than you lose. But what you don't understand is when you lose 3 times more than you win. You're doing it backwards. But people stay in this game because they fucking win.
Right.
They just can't figure out how come they can't make money. Like, God damn, I'm winning 6 out of fucking 10 trades. Yeah, but the trades you win are worth 200. When you lose 4. Get it now? That's why trading is so popular. It's because people aren't out here fucking losing. They're winning the trades. They just never make money. Because they don't understand the only rule that matters. You must win twice as much as you lose. That's the only thing you need to fucking figure out. If you can figure that out, you can scrape an entire year being the worst fucking guy out there, and you will still scrape together $50,000 in wins, and you're trash. But the one thing you did was you win twice as much as you lose. And you're terrible. That's the beauty of it. That's why people can't stop. That's why so many people can't figure this out. Like, well, what happened? Well, you were winning $700, $600, $1,200 a win. When you lost, you gave $8,000. Fuck.
Sounds familiar.
Yeah. That might be my problem. That might be it, guys. That might be the problem. I'm giving back 400% more than I win. Fuck. That's the problem. You know what I'm saying? Oh, yeah. But that's why in the Trading 102, a lot of times we want to stay to the point where we're just focusing on just the fucking rule. Just the concepts of, there's a wave 1, a pullback, wave 2. There's a dip, a bounce, a bigger dip, right? This is not hard. You don't need to come up with the greatest trade strategy, you don't have to build the best trade in the world. You just have to understand the fundamentals of the philosophy, the mentality of everyone out there. They're waiting to trade. They see something go up. There's like, oh, they buy the pullback and then they hope for FOMO. That's how they trade. Something goes down, they wait for it, it bounces, then they're like, oh, this should keep going down, and then they work their way in. The thing about when people buy is that when things start going down, they sell a lot faster. That's why shorts are better. When things going up, it's hard to figure out how many people are going to buy when it's going up because it has to have a lot of things that show confirmation. It has to have a consolidation. It has to bounce. It has to find support. It has to have a retest. Then it has to break out again. Then it has to pull back. Then that's why people lose so much, because they need 2 or 3 confirmations to go long, and then normally they're going long at the tail end, and then they hold thinking that it's going to fucking go up twice as much because it's exploding. Like the mentality is always like, oh, to the moon, or oh, it's gonna run. No, there's exhaustion, right? There's always exhaustion. At some point, once something goes up, it can only go up so far. There's only so much money.
Yeah, like I was thinking that with my stop losses the other day. I was like, why would anybody go long on the market? Like it pulls back. Like if my stop loss is next to nothing and it's going to take me out, I'm going to get taken out, as opposed, and how many other people are going to get taken out by whatever their limits are. So it's easier to get taken out because people are going to sell, because if you don't sell, you don't make money. You don't, you know what I mean? You don't make money until you sell. And yeah, I was just like,
was to get in. But that's what I'm saying. That's why right now in the 102 is like, we want to really just focus in on just understanding what game you're in. Like, don't forget the game you're playing, because that's all that matters. Right. You got to understand, when you see something go up, it's only going to go up so far. They got to sell. They're always going to sell twice as much as they bought because they got to take profits. But in the meantime, as you're building these strategies and you're watching the gameplay, you have to understand that your goal is, no matter whenever you get in, whether you're right or wrong, you have that rule that you can only lose X amount of money, because when you do well, you only win X amount of money, right? You don't change that rule when you have a good day, and instead of winning 400, you win 2,000. That doesn't mean you're a $2,000 guy. You're still a $400 guy. Right? Your strategy is built for $400 to $800. Sometimes you'll win 2,000. Sometimes you win 4. That doesn't mean you throw the $400, $700 goal out the door because you had one grand slam. All right, you're a base hit hitter. You gotta go with
I think that's the best analogy too. Is just play. Make your bets like you're just trying to get on base.
Yeah, just find your consistency. You find your 1% move, find your 1% trade. Build a simple fucking trade. That trade will have good days sometimes. Sometimes it'll be doubles and triples. Sometimes it'll be grand slams. But your job is to live in the reality is 80% of the time, the market is going to be normal. 80% of the time, it's not fucking Christmas. Like, that's what you always got to think. It's not Christmas, man. It's not tax season. That's how you live. You gotta build the systems around normal shit, averages, normal percentages, law of average. Then when the things come in and Christmas and all the cherries on top, that's just you collecting extra, but you stay in the same zone. I'll make 5. That's why I said that's why I said the other day, I'm gonna build the videos this week of just this will be part of it. Like, just understand the one rule you have to understand. Second rule is, okay, how much do I want to make? Here's how you build that. And that's it. When you got those 2 goals down, that's all you do. 5 trades a week, 10 trades a week, this amount of money. This is what I do. Nothing changes. It's like going to a job. Punch in, punch out, punch in, punch out, punch in, punch out. It's just a way better job. That's kind of what it is. But that's the reality, and that's where we have to really just focus and bear down on, because that's the only shit that matters. Nothing else. Right? Pick a simple strategy and then go build an entry, build a understanding, build steps that you can rinse and repeat. test them, back test them. What's the stop loss? What was the leverage on there? What's the percentage that it does? What are the averages? Find the averages, build a system in those averages. And that's it. Fine tune that move. Fine tune the 1 hour pullback. Boom, 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 boom. Until you go, oh, I got it. I understand. When it does this, this, and this, I wait for this, and this is my confirmation. This is how I enter. Bada boom, bada bing.
Yeah.
And that's all I do. But the reality is what the very first thing you always have to do is got to make sure I win twice as much as I lose. I got to focus on not giving the market money. It's okay to lose and then wait for a better opportunity. But, once you know a trade is happening, if it goes against you, you then say, oh, well, I'm in the right spot. I just got to take this next move, right? Knowing when you're in the best possibility, knowing when you have the best percentage of success, which allows you to track and trade, knowing that it's okay to take the loss. I'm allowed to give 5 of these losses back anyways. It doesn't affect it because my wins have been twice as much as my average anyway, so I'm already up.
Right.
Not emotional, systematic. And that's how you kind of remove emotions, is just by doing things over and over in a way that it's just the way it is. And then when you're winning more than normal, you're just like, man, I'm really doing good. So when you do take a loss, you're like, I haven't lost in a while. Like it's gonna happen. Like it's already built in the system. It's supposed to happen. You know what I mean? That's really what, you start just really just honing down to. It's a process, workflow. It's the workflow. It's like cutting a head, like up, 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 brush, 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 up, 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 brush, brush, brush.
Yep.
You don't change. Same shit every time. Because that's how it's done. It's just rinse and repeat. And that's really all it is. So like I like these lessons when we do a long lesson like here, we get to talk it all out, but then I want to go back, I got to make bullet points to where it's just the simple part of it. Right? Because once you talk it through, it's like, oh, okay. You don't need to add a lot of things just to have the basics. Because once you get the basics, the person's going to build the skill level.
Yeah, in the very beginning, I was so overwhelmed. Like at the beginning of this class or whatever, I was like, if I was like, no, I'm gonna file me. I need to bite-sized pieces.
Yeah. And that's where it's like, I like when we do the discussions and then we can go back and piece together, I can redo bullet point videos, right? Simple thing like, well, I'm going to take the 1 hour pullback and put it in the 102 videos and just walk through the simplicity of how we would, pick an entry out of there. And obviously the only entry we do is a 3-minute. So when I redo these 1 hours, I'll be using the 3-minute as the guide to the entry. Because that's why we do 3-minute trades. 3-minute longs, 3-minute shorts. The only difference here is the trigger. The trigger is going to be the 1 hour down. Look for a spike, get your averages, simple little things, and just walk through the basics. The less you have to think about or do is the way we want to execute, right? When you try to make something perfect, you add so many steps because you're trying to win 8 out of 10, right? When the reality is you don't need 8 out of 10. If you do 5 out of 10 and you win twice as much as you lose, or 3 times more than you lose, guess what? That's equivalent to 7 out of 10. If you have the greediest entries, you won't lose 5, you'll skip 2 of those losses. So in reality, you're winning 5 out of 10 with an average of twice as much as you lose, and your losses, instead of 5 losses, you're only losing 2 or 3. So you've already doubled your profit. So it's about trading 102 is about doing things fundamentally, systematically to use the percentages to be successful based on your skill level. The worst guy in the group, right? That's why everything is being built on based on worst case scenarios. Other people will
Yeah.
have better results because they understand it, they see it better, they improve it, they make it better. But that's just going to be what they do. At the end of the day, they're still doing the same thing, keeping the same stop loss.
Mhm.
They're just winning more. Their entries get better, so they're winning more, right? But they're giving back a very small amount of money based on how much they're raising their bags. And at the end of the day, it's always 2 to 3 to 1, right? 2 to 1, 3 to 1, and that's it. And if that average makes $1,000 a week, you double your bag. Now you're at 2,000. Double your bag. Now you're at 4,000 a week. And you are at your skill level. You've done nothing different. All right, guys,
Right.
we'll hop off here. I'm gonna get some of these videos this week. We'll go back during probably Wednesday, Thursday, and redo a lot of the videos, and then we'll drop all the videos on the weekend of all the basics that we're looking for this week. All right, guys.
Cool. All right, brother. Appreciate you.
All right.
Thanks for joining, guys. I appreciate you. Asante, how's that sound? That sound good? You starting to make a little more sense?
I'm a little, because I thought that initially that we were using the stop loss as the entry,
Yeah.
but you didn't do that. Oh,
No,
okay.
because
Yes,
yeah.
you did.
Okay, see, look. This is what I was talking about. So what I'm saying is, when we do something, a lesson, right? It's not. I'm not walking through the full entry. I'm not walking through the steps that you already have, right? So when I talk, like today, for example, I'm talking about the 1 hour pullback, right? I'm going through a basic, simple way to look at a trade and simply go, if you look for a push or something that would, go up to the resistance, that is normally an entry. Is that the best entry? No. Is that the right way to make the trade? No. It's just the simplest way to execute this trade. Now, your skill level is where you make this trade better, right? If you go in there, find your area, put an entry, put your stop loss, look at the stop loss, say, you know what, I need more cushion there, and then move your entry to your stop loss and do your stop loss entry, that's what you do, because that's where you're at. Not everybody's at where you're at. See what I'm saying?
I got you.
Yeah.
I can't speak for her, but I kind of get this. Like in the beginning, this is what when I signed up, I thought it was going to be like, this is the course. This is what it is. It's like any other course you take. There's like a workbook, a manual. This is what we're going to do on day 1, chapter 1, and then chapter 2 and chapter 3.
Mm-hmm.
And it was a lot to take in the very beginning. I went in with that mindset, and then it's like one day we're talking about the 4 hour building the trade, and then the 1 hour, and then Ashanti was talking about the swing, which I have no idea what swing trading is. And then today we're talking about my thing, and then now we're talking about the RSI. So it's like you have like a buffet of things that to choose from, and it's like you're going to a buffet with a whole bunch of food that you've never tried before.
Mm-hmm.
Like it's overwhelming because each dish is its own.
Of course, yeah.
I don't know what. Yeah, it's something new, and it's something new to digest, and you don't like it's intimidating and it's confusing because you're using not the crypto thing. It's all the same terminology,
right?
But each one is a different package.
Yeah,
and
that's why, and so what we're doing now, like, so you have to. That's why I said in the trading, when you're in the trading 102 course, right? You go and you do your monthly whatever, and you go and you see all those other folders. Those folders have only one subject, 3-minute trade, right? Structure, right? And every time I do a video, it'll be just about that information, because that's only things that matter in that folder. When you do a class like we did today, this class was to simply show Joey C where he got into early on a trade. And all he did was he was in wave 1, he didn't wait for wave 3. He didn't have the 4-hour RSI heading down for him. So he was just too early. Like, that was how easy it was. And then when you ask, like, when you guys are asking questions and it's like a full live discussion, the questions are going based off of the answers are going based off how you see something, right? Which can go all types of different ways. There's 100 different ways to get to the same thing. That's why at the end I try to sum it up with, okay, this is where you start, right? Each person, like I said, it's not a one trade fit all. Each person is going to have a different way to do the same trade. Each person is going to have a different leverage and a different target than the next person, right? So that's why when I went and said, listen, just think about simplifying the 1 hour pullback, right? And that's what I was showing Joey. Like, here's your first 1 hour. Here's your second one. The second one is normally the one you want to do because it's on the third wave, right? Now, not to overthink it. It's just like you see a push. The only thing that can kind of really take you out is just like how we do a long. We decide on a long, we look at support. Then we find the second support, and that's our 2 entry spots. On a short, the resistance is the support. You look for the top, and you look for a higher top. And those are normally where you're going to be looking for your long positions. And then, based on where you're at on your trade structure, you, or however you decide, so what you're doing is, so to kind of form it up, as if you took the trade and you said, okay, I'm going to do the 1 hour pullback, right? And then, so you already know the fundamentals is you just let the 1 hour head back. So Asante, you turn around, you see the 1 hour heading down. You decipher where you're going to make the trade, right? If you're using the 3-minute volume, you would be picking a location based off that. If you put your supports in there, or resistance lines would be for the short, you would see those areas. Then when you put your structure, which is your stop loss percentage, how much you're allowed to lose versus how much you are trying to win, and you put that mark there and you look at it and you say, you know what? I'm going to do a stop loss entry, right? Because longs are different than shorts. And you decide to do your short, but you want to move your entry to your stop loss just like you do a long, then that's what you would do. And then once the trade did its thing, you would see where you were off and how it worked for you. And then you would do it again. And you would do it the next 5 times. And from those 5 times of doing the steps that you're doing, you could see the data on where you were successful, not successful, or what was happening. You see what I'm saying? Then you can say, you know what? I see my resistance and I see the moves, and based on the 3-minute, the entry that I originally picked would have been successful on all these shorts, and I still would have not hit my stop loss. So now after 5 trades, you can just go with the entry that you're picking without doing the stop loss entry. See what I'm saying?
Right.
Because the data shows that your entry's good the way you're figuring it. The only reason we do stop loss entries on longs right now is because people are getting in and they're getting wicked out. The very first thing you got to do is you got to do entries to see if you're getting wicked out. And when you do a stop loss entry, what you're doing is you're giving yourself an extra opportunity not to lose. And then once the trades start building, you're realizing that they're not pulling back to your stop loss. They're pulling halfway. You move your entry up halfway. You work into your entry.
Right.
So you're using the same steps. You just have to collect the data. Right? When we talk about a trade, remember, we're not trading 102 isn't about giving you a trade strategy. It's about showing you, based off whatever strategy, which is normally support and resistance, the 1 and 2 and 3 waves, right? All it's showing you is that when these opportunities and these trades come, once you decipher what trade you're going to make, how to have confirmation that you're right, how to do a trade that will give you the opportunity to not get wicked out. Why do we do a stop loss entry? Because most people enter and it goes to their stop loss, right? So if you are doing a trade 10 or 5 times and 3 times you got wicked out, if you move your stop loss, if you move your entry to your stop loss and you would have done the stop loss entry and then you repeat those next trades, it turns you from 3 stop losses and 2 wins to 3 wins and 2 stop losses by simply doing a stop loss entry. Then you understand that the way you're picking your entry is it's better to do a stop loss entry because your entry isn't that great. See what I'm saying?
Mm-hmm.
But it's giving you the opportunity to lose less than you are, right? If you don't get in a trade, it doesn't matter because it's better not to lose a trade than to be in a trade. And once you get to that position of where you start to see where you're missing the entries, you slightly move your entries up to where you get more averages of getting into a trade. So none of that changes. When I do this here and I say, okay, here's this trade, it pulls back, here's a resistance, there's a bounce, here's an entry, right? That is basically the simplest way to execute that trade. That's the lowest skill level. Now, if I go here and I say, okay, when I see this happen, I'm going to my 10-minute. After I see my 10-minute, I'm going to my 3-minute. Here's how I enter this trade on a 3-minute, right? Now I've created a trade that I'm teaching you that I'm doing, which is my trade. Now, if you do anything different, you're going to spend your whole time thinking to yourself, all right, he went to the 3-minute, he does this, okay, this should be here. And you're trying to do something that your brain might not be able to understand. When if you just do the basics and say, okay, the 1 hour is heading down, I need to look for a short. And you break down the trade by just all the information you've ever learned. And you say, okay, this would be here. This is the resistance. This looks here. If I did enter here, then here's my stop loss. I probably want my stop loss a little bit higher. So let me move my entry up higher so I have a deeper stop loss. Okay, this looks good. Okay, that all looks good to me. And then you execute that trade. You did that trade based on how you understood the trade. Does that make sense?
Yeah.
And if you're wrong, then you can adjust your entry and say, you know what? I need to do a stop loss entry that would have been successful. And then you incorporate that situation. And then as you start to move, you can fix your losses by just having better entries, but then you'll start to develop the ability to sharpen your entries to see, oh, you know what I missed? I didn't do this. Then you add something to your, oh, you know what? The 4 hour wasn't heading down there. So you know what? There's the 4 hour gives shorts more success. So I'm going to do shorts when the 4 hours there. But that's something that you have to see. You have to develop. So that's why we don't teach trades anymore. What we teach is very simple rules of what you're doing, right? Because as you build a trade, you have to build your trade. There's 5 different ways to get into this short, right? If I showed you all 5 ways, it would just confuse you because you wouldn't know which one to decide. Now, if you tried this short 5 times on your own and we went over the data, I could show you how to fix your entry. I can show you how to adjust your thought process to where you understand what you just did. Because at the end of the day, that's the only time you're going to have confidence in a trade. It's the only time that you're going to do a trade and feel like, oh, I know why I did this trade. Not because this is how VC does it, but this is how I do it. That's where you kind of have to. That's why when you go to the folders, like I said in the Discord, when you join in and you take the 102 course, there are folders for the member monthly area, day 1 intro. All those videos, if you watch every single video, it is only about the day 1 intro. If you're building a trade structure, this video is only about trade strategy. If you go to your trade structure, all these videos are just understanding the game, understanding. So every time I add a video here, it'll just be about building trade strategy, not a lesson where I talk about 7 different trades, right? If you go to the 3-minute trade, it's only 3-minute trades.
Right.
So when you learn it, you're learning just, division, multiplication, right? 4-hour strategy trades, right? So that's where, so all the videos that'll go in here, when you learn them, they'll be just about what you're trying to understand. When we do lessons like this, we're covering, like looking at a trade and just seeing where the mistake was. And then what can you do to be better, right? And this is just showing, hey, this is a simple, without an entry, without anything that we do. Now let's kind of, to give you an example. All right, I'm going to do this pullback here, right? I'm going to do this 1-hour pullback. I see the 1 hour starts to pull back here. What would VC do? Okay. Well, what I would do is I would be using my 3-minute entry. So I'm going to go down here. Let me put my box down here. This is where the box begins for my 3-minute pullback, right? My pullback zone. Okay. How I enter this trade or how I do this trade is a little different. I would see the 1 hour start to go down. I see that happen. I go to the 3-minute. Okay. Real simple. Now, based on how I trade, right? I would be sitting here in the 3-minute. Now, the one thing I want to do is I would look back because I'd be at this point right here, right? This would be exactly where I'm at. I'm looking for the pullback. I would look at my prior 3-minute, okay? And I would see that I broke out here. I had a touch. I had a dip. I had the next push. And now I'm funneling here. And I haven't broke below my threshold. The moment that I break below my threshold right there, right? What I would look for is I would look for the break below the threshold, and that is where I would basically make this entry. Right here, I got a 3-minute, it breaks below right there. This right here would confirm that I'm looking for the entry at that point. Once this happens right there, and I get that break below my 10 threshold, which is right there, that's where it would trigger that I'm going to take an entry on those levels. So if I roll this up to here, I know that I'm entering now because I'm broke below my threshold right here. So all I'm going to do here is I'm going to wait for a bounce. The moment it bounces, which is here, I take that entry. That's my entry right there. That's it. Now, let's go to the next one. Here's the 3-minute, right? Here's our blue box. I open this up. Here's the 1 hour heading down, right? So at this point, I'm always volume. I'm looking for the volume here. I see my volume. I see my volume. When this volume breaks down and bounces, this is where I would be looking for short positions on here. Now, if I get my my 1 hour pullback, which happens right here. When I get my 1 hour pullback, I'm in a downside on my volume already. So what I would be waiting for is I'd be waiting for a bounce from here. So when this 3 minute here starts to bounce right in this zone. Now this is where I would be to kind of look at this trade for me. Here's your 1 hour pullback zone here, right? It pops in down here on the 3 minute. All I'm looking for is I would already be in a 3 minute downside when this pops in. So I would be waiting for this to actually bounce up. So my entry would go off of the next time the 3 minute starts to head down, right? So this is where it pushes up, starts to head down here. That's where I would be looking for my entry, would be for the 3 minute heading down from there. So my entry would play off this section here. So I would enter somewhere off of this candle here. Pretty much the same entry that we had earlier. But that's because I'm using the 3 minute bounce and I'm getting in on that next move down, which is right there. Because the 3 minute, when the 1 hour hits, I'm already down. So I have to have a bounce and I always get in on the bounce, right? Move down here. Here we go again. We have the volume on the 3 minute. Volume, I wait for it to break threshold, right? So I get it here. The moment it breaks threshold is right here. So that's where I would be looking for entry there. If you wait for it to break below, like that's 1 hour down, the moment that 3 breaks the threshold, which is the 10 threshold there, that's where I'd be looking for entry. So just like here, see how it broke threshold right there? Breaks threshold right there. That's my entry right there. Same thing here. Here's my 1 hour. Pops up here. The blue here. Here it's the breaks the trend right there. That means my entry would be here. So this would be my entry right there. And see, my entry ends up matching the entry on that jump. See that? So I get my blue box right here. That's my blue box. The moment that blue box is in there, I look at my 3 minute. I look for volume to break the threshold. Boom. Breaks threshold. Entry on this candle. Boom, boom. That's simple. Is that making more sense to you now? Ashanti, is that making sense for you? You guys still hear me on there?
Argument's king.
Yo, you hear me?
Yeah, I can hear you.
Yeah. So that's how I would do that entry right there. But that's me using my 3 minute. Now, the other way to do the entry is this. Right? I mean, that's what I'm saying. There's 5 ways to make this entry. You just have to, like, when you have whatever system or strategy you're going to use. So, like, Ed, how would you enter here? You get the 1 hour heading down. What's your entry?
wait for a pullback, and then enter. Like, for example, maybe you had to wait for a pullback under 3 minutes, and then when it start heading back up, I enter that way. Or I can use the green, blue, green from the top.
Mm-hmm. What time frame?
Oh, I would enter either off the 4 hour or off the 2. Well, not really the 2 hour. Off the 4 hour.
Yeah, you're doing 4 hour pullback. But if you had, let's say you're entering here, what time frame do you look at for your entry? Like for me, once I have a 1 hour pullback or 4 hour, I go to my 3 minute, and that's my entry right there.
Oh, right, yeah. Listen, I've been working so many different strategies. I had to think which one. Right now, I'm using the 2 and the 3 hour to for my entries. So I would go to the I would go to the 3 minute, right,
Mm-hmm.
and then wait for a push up, and then once I get my push up, then I would enter from that top.
Yeah, so that was see, I didn't. For me, it would be this, right? I normally, if I'm looking for a short, I want the volume to be maxed, right? So when this one happens, it's okay to kind of see that short play out. But what happens here is, where's that other one? Oh, this entry here. When this entry happens here, I don't have, it's kind of where the volume's already negative. So a lot of times I would probably skip this one because the short that I would have done would have been over here.
Right.
Because I want the volume to break up and show me a big chunk. And then when it dipped, I would short this one here because that's a positive value. When this one shows up, if I had to make that, if I was doing a 1 hour pullback and I was just repeating a process, I would just wait for the bounce that I got and then I would take that short, right? And either way, it's successful. But if I was doing a short on my side, I would need positive volume. So I would actually not be in this short because that short just doesn't have positive volume. See what I'm saying? Like I'm shorting from the top of volume down. That's what I want to short. This short here makes more sense because I have positive volume and then I'm shorting down. You see what I'm saying?
Right.
That's what I'm shorting. I'm shorting the tops to the bottoms. This short I probably would avoid because it doesn't have any positive. You know what I mean? Like that's a short I probably wouldn't do.
Right.
Just
I don't
like
always short from the right. I don't always short from the very top. Sometimes I'll use like the 2 minute short strategy. Wait for it to go down, and then come up maybe to a green moon, and then once
yeah,
you get
that's
another
what I was trying to say.
downtrend,
That's what I was
right?
trying to tell. Is she still in here, Shanti? Were you making dinner?
Yeah, I'm here.
Okay, so that's what I was. So did you see my entries on these? I would just use
Mm-hmm.
the 3 minute. I would wait for it to break threshold, and I would take the entry. I would on this one. It's not above threshold; it's already below. But I would let it bounce, and then after it bounced, I would take the short. But the reality is probably I'm not going to take the short on the second one because I need positive volume to to work down from. And in this second blue box, I don't have positive volume, so I probably would avoid that short simply because it doesn't have anything. Now, the third time when
Right.
the blue box happens, I'm coming after having positive volume, you see? That is where I would take that short. So that's what I'm saying
Okay.
is like, you know, you have to kind of piece together, you know, um, how you would normally, because here's the ideal. If I gave you the 1 hour pullback, and we spent an hour together. In the very first 20 minutes, you explained to me how you would do the short. And then I would show you little pieces on how you would do it to improve your own theory. And then once you have that, and then you incorporate the 3 minute into that theory, you can use the confirmation of the 3 minute, like I did here, to say, okay, I'm topped out. Here's a bounce right here. And then I'm going to short that bounce down. Right? That's how you can, use the theory to get the trade that you want to get, because that's kind of like, your understanding of a trade, right?
Yeah.
And that'll help you build your own strategies, because it's a trade you do mentally already. If I said, okay, we're going to change everything you do, focus just on the 3 minute, all you would do is you would think of the 3 minute, and then you would question every single trade, because everything you learned before or everything you understand makes you not confident. That's why you have to build a trade strategy off of what you already understand, your knowledge, or what you think, or what you see. And then once you have that, then you can start picking pieces of confirmations of trades I do to kind of improve what you see and how you do it. That's why when we teach, we try to keep a very, it's not about doing the trade. It's about, here's a trade that's possible. Now go work on it. Piece together how you would do it. So your lesson here would be, do the 1 hour down RSI, and then figure out where those trades are going to do their best, right? One of the tricks is, it's normally after a first wave, the second wave happens, but the third wave is always going to be the best one. You know what I mean? But you have to kind of go process, okay, when the 1 hour RSI heads down, those are possible shorts right now. And you have to piece together, how you would see those, and then go see how they play out, right? And then once they play out, you can kind of build there. So that's where, in that, like I said, in those videos, you'll see where there'll be a folder called the 1 hour short, and that'll be just videos of a 1 hour RSI pullback, how I track it, what are the steps in there, and there'll be multiple ways to execute that one trade. But out of the 7 or 8 videos or 10 videos I do, it'll probably be about 20. One of them might be the one that you go, oh, I get it, even though I'm saying the same shit.
Right.
There's always.
Well, I like the dotted. I just call it the dotted line. I know you call it
the threshold.
Threshold.
Yeah.
But right. I like the way when it goes above the threshold to do a trade. I've been doing that, and what I also been doing is you know how when it just started to break the other way, I put my entries there.
Mm-hmm. Yeah, that's what I'm saying.
But like I said,
you're building a strategy that makes sense to you. So when you make a trade, you're more confident because you've seen the results, and more importantly, you understand how you got there, because it was your steps, right? So what you would need down the road is where, once you kind of have your strategy in hand and you're rinsing and repeating it, we go and look at it and then give you little tidbits and tips that you can add to confirm what you're already doing, instead of trying to make you build or do a trade from scratch. See what I'm saying? First part is building your trade strategy, which is what you're doing right now, right? Once you have that in there and you build this trade strategy, then we can go critique it, which is just, give you little extra things that you can add, things that make sense for you, and that increases your skill level. And then, you start moving up one little step at a time, baby steps, instead of giving you a full out,
Right.
no, this is how you do the trade. Because even if I showed you how to do a trade over and over and over, but you just don't understand why it works, then you'll never be able to make that trade. Because you're
Right.
always going to be questioning the why. But if you build a trade and you do it the way you think, and you come along, and you're like, oh, that makes sense. Oh, I do this because of this, right? It's easier
Well,
for me,
I mean,
it's just easier for me to give you little things once I understand how you see something or how you trade than it is to
right, but
try to give you a full out trade thing.
right, but what I'm saying is the way that you just did this trade, when it break out, because I've been watching a 3-minute video.
Mm-hmm.
Now you said that if I'm doing, like, let's say a long, because that was the example that you gave
mm-hmm.
in the video. You said that as soon as it break from the negative back into the positive, you said that that's where we put once it started going back above bullish, that's where we mark our entry.
Mm-hmm.
But when I'm looking at it from here, I mean, but when you do it, you're putting it towards the end of it.
For the short.
Well, it would have been a little bit easier if you would have did a long instead of the short, because off the video, you're doing long.
Yeah, longs are different. Longs are different than shorts. Because remember, longs you need three confirmations and you need value. Shorts are normally it's easier for people to sell than they are to go long. So shorts normally manifest faster than longs. So here, the idea would be I would need the 3 minute to go negative, then bounce up, and then go negative again. Right? That would be assuming that people are going to hold more than they do, right? Well, shorts don't really work like that. Once they start to sell, they sell. You don't need a confirmational bounce, right? Because once the volume disappears, volume keeps disappearing. Where volume shows up, volume needs to show up, needs to hold support, and then needs to show up, needs to hold support, and then it shows up heavy. And then once it shows up heavy, then people say, oh, there's money, and then everyone FOMOs in. It's two different types of trades. Because you got to realize, once something's already up, it's easier to go down because they've already made money. The entire point was to get in to get money to sell. Selling is twice as easy as buying.
Well, I'm going to do that then. I think I'm going to just focus on, I'm going to focus on just shorting for a while.
Well, yeah, because
now I have to rewatch the video and think of it backwards.
Right. That's why I say a lot of times, the reason why we don't when we do classes or we do things or we do an open session like this, it's like there's so many things you can learn that learning too much is actually bad. Right? Where you have to just kind of see something, go, oh, okay, I'll go back, I'll watch those. It's almost like a series of videos that you have to focus on, right? You're doing really good with your longs, right? Just focus in on your longs and your short. You're doing well. You don't have to change much. Just make sure your structure's in there to where as you do a trade, go back and see what it did and start picking up more information, right? And it's a very slow step side, right? Just stay in the consistent side of what you're doing, because we're seeing
well, see, that's another thing. When I was doing retail trades. I was doing bullish trades and short.
Mhm.
But since I have to pick one or the other, and if shorting is a little bit easier, I'm just gonna stick with that.
Yeah, I mean, shorting is always going to be a little bit easier because once something's exhausted, people are going to take profits.
Right.
Yeah, so that's always going to be shorting is always going to be a better option than long. Long is always going to be, once the thing about learning how to short, which is great, you're doing great on your shorts, 113%. Once you learn how to short, you're going to start realizing that you know where the bounce to the upside is. Because once it's exhausted on the shorts, it can only go up.
Okay. Now, is it possible if you can do me a favor? Um, is it possible that you can do a quick video, kind of like what you did with the 3 minute, but on the short side? Because it's gonna be kind of hard for me to rewatch that and work backward.
Well, what we're gonna do is that's where the 1 hour. So in the 102 courses, there'll be the 1 hour pullback, right? The 1 hour short.
Okay, I'm gonna do.
So yeah, well, all I'm gonna do is work on the 1 hour short, and the 1 hour short will have the basics of doing what we literally just did tonight in this video. Is just walk through the shorting of the 1 hour.
I still want to do well. Okay, this is what I'm thinking. I still want to do the 3 minute entry, but I want to do the 1 hour short.
Mm-hmm.
Like kind of do them together.
Yeah. Yeah, that's what we did.
Okay.
I mean, like right there.
Because that's how I'm thinking.
Yeah. So in the videos when I do the 1 hour shorts, we'll be going through the moon indicator as a confirmation. Whether it'll be the 3 minute or the 5 minute, but it'll be something in there. Right? That's why so it'll be either the 5 minute short, right, with that, or the 1 hour short will have the 5 minute moon indicator in there. Right? We have to go in here and we have to, when we put the short together, we have to analyze the best, like, which moon reset, right? So like what Ed was talking about, he would wait for a bounce or a moon reset where it goes green, blue, green, or blue, green, blue, right? So there's steps to shorts that are in there. So when I do it, I have to kind of go in here and I have to decide, which theory or which process we're going to put in there to keep it very simple, right? There's always 3 entries to every trade, right? The question is which entry fits the easiest process, the easiest way to determine, right? So we'll see. With like I said, I won't know until I start like tracking the 1 hour pullback, right, in the current market conditions and piecing together which on the 3 minute side how we're gonna kind of roll that out, right? Because normally when you do longs, just to kind of understand what I'm trying to say is that when you do longs, the 3 minute volume is normally dictating the upward pressure. When you do shorts, it's always the opposite spectrum. So normally a short isn't going to be a 3 minute volume. It's going to be an exhaustion, which is the opposite of the 3 minute, which would be more of a 1 hour. Because there has to be volume, that is a lot of volume that came in order for it to go down. But we'll cover it when we go through the video. So, we'll try to kind of piece it in.
So what? Right. I mean, so if that's the case, I still would need my daily to be
Well,
up,
those are skill levels,
and I
right?
guess
So here's right. That's what I was trying to say. So the daily and the 4 hour are all attributes to what you can expect as far as strength or momentum in a certain direction. Trades that are being built and executed can be successful even if those are against it. The only difference when you have those with you is that you can go for more. You can get extra, right? So to kind of give you an
Okay.
example is if your trade can be executed in the worst conditions, then that is an A1 trade. If your trade only works if everything is in your favor, it's probably not a great trade. That's why having a weekly or a daily and a 4-hour with you just means that when you during that particular time going with that momentum, it means that those longs are going to be better than they were when you had the daily against you. But even with the daily down, we can still execute longs. We just know that we can't expect more than normal.
Right.
Right.
I mean, that was the key takeaway for me tonight.
So
That was an eye opener.
Yeah. So what I'm gonna do is, like I said, don't overthink the classes that we go through. This is just conversations. The real things that you want to do is when I put out a video just about that one topic. Because that's the bullets that only matter. It's the bullets that just the breakdown of the only thing that is what you need to focus on. So I will make a video about the daily, and it will really. I'm going to make a video about the weekly, the daily, and the 4-hour, so that people understand that it doesn't matter if they're against you, if your trade is correct. It doesn't. All it does is help you get extra, right? And all it does is if you're making a trade, you should be building a long trade against the daily and the 4-hour to see if it is a good trade. Because you got to be in a situation where when you build a trade against the worst case scenarios, it shows you what it's capable of, right? Then when things are good, you're always going to hit it. So if you're building a trade and you build it against the daily and the 4-hour, and when the daily and the 4-hour are with you, what's going to happen? Your trade's going to be more successful every time because you built it in worse conditions, right? So I'll make a video on the daily, the 4-hour. It just means that when you're making trades, you can't expect more than what you should expect. You need to adjust for those situations, right? So it's just about knowing that it's like, okay, I'm going for a run today and I'm carrying my backpack. Cool. Tomorrow I'm going for my run, but now I have my dog in my backpack. It's a little heavier. Tomorrow I'm going for a run. Now I have my water gallon and my dog with me. It's going to be a little tougher.
Right.
See what I'm saying? But I still got to make my run.
I get what you're saying.
Yeah. So
yeah, that was my key takeaway tonight.
That's where we'll make those videos and we'll kind of go in there for those and we'll build out from there. But like when we have these big discussions and kind of cover a lot of ground, it's just as to say, okay, I got some got some things to focus on here, but it's skill level. Not everything's for everybody. Not every nick, not every cheat code, not all those things fit everybody's mindset, right? Some people are painters, some people are not. Some people can draw, some people cannot, right? It's what you can add to you. Like just by going, oh, I'm keep doing what I'm doing, but I like that extra 4-hour thing. That's pretty cool. And you add that one little piece, right? This isn't about having you don't need 100 pieces to do one thing, right? You need 3 steps that happen all the time and 2 confirmations that make sure that you're always in those 3 steps. The rest of it, some things are cool, some things are like, oh, that's really cool, right? I mean, I could sit here, it's like, oh, I'm driving and I have Goodyear tires, and then there's sometimes it rains. If I have rain tires, I get even better traction. But do I really need rain tires? No. Because my other tires are great too, as long as I don't hit a curve at 60 miles an hour and try to make a sharp curve. Now, if I'm going to be doing that, I probably want my rain tires, right?
Right.
But you only need what you need to be successful. Remember, this is not hard, right? All the fancy things and all the other things, it really just depends on who you are and how you trade. You only need enough to be successful. It's like what they say, you don't have to reinvent the wheel, just push it, right? Now we can add spokes, we can
Right.
add rims, you know, but we only need to add what we personally need to understand. You know, like
Right.
I've gone through trades and said, okay, how do you do it? And I've seen 100 different ways to do one trade, and I'm like, at the end of the day, this is the easiest way to do it. All the other stuff is cool, but I just do it when it makes sense to me. So when I do it, I'm like, oh, this is why I'm doing it. This is how I do it, and this is why I do it. It's just because it's confirmation to my trade. Like, what does my brain think? Does my brain,
Right.
agree with that? Does this make it easy for me? Right? That's the entire goal, is to get to where you can do the same steps over and over with confidence because you understand it. It's like watching math. If you watch how we do math and then watch Chinese people do math, completely different, but it's the same answer. You ever see
Right.
you ever go on TikTok to mathematics and they show you American and then they show you Japan and China? You're like, what?
Oh yeah, I know they do
Yeah.
it completely different.
Yeah. But it's the
Yeah,
same.
I used to kind of like observe the way that they used to learn and study, and
Right.
it's very different from America.
And they get the same answers. So there's always multiple ways to
Yeah.
do something. It just comes down to how you understand. How can you compute, right? So a lot of times when we do these bigger classes, that's why in the Discord you see, and I've taken away a lot of folders, I've taken away a lot of lessons, I've taken away videos, replacing them with simpler versions of it, is because too much information is actually a downside, right? You just need to figure out. So, like I said, number one rule: win twice as much as you lose. Give yourself a trade structure that makes you only lose as much, 25% of what you win, half of what you win. Win 5 out of 10. Have a 50% win rate. You're a profitable trader. Now, as you do that
Right.
and you continue forward, you will get better at understanding a chart. You will get better at going, you know what? I need to be greedier on my entries. You will fix all the little problems. You don't need to fix a lot to become a person that wins 5 trades and only loses 3.
Right. Um, like
That's
I said,
that's the
yeah.
goal.
I mean, you're right. It's just now, like you said. See, again, I'm so used to doing like retail trading. I'm so used to trading with everything on my side because that's how I was taught. But you teach a better, unique way that I like. You teach when things are against you, how to still make money. It may not be as much as if everything is on your side, but it's still average or whatever number that you can get, and that's what I want to focus on.
Yeah,
But
yeah, it's
like
just
I said,
mathematics.
and then another bad thing, like I said, I was doing longs and shorts. Now I know that with shorts, I had learned shorts. How do they say? The market goes down more than it goes up,
Oh,
and
100%.
I do believe that.
Yeah, I love shorts.
So that's why I said if I had to pick between longs and shorts, if I could only do one, I'm going to stick with shorts. From here on out, I'm not gonna do any more longs.
Yeah, shorts
And I'm
are.
gonna stick with, like you said,
I love
the
shorts.
1 hour. Yeah,
Shorts are
yeah,
the
oh
best
yeah,
trade. So when I all I've ever done was short the market, right? The only reason I started doing longs or teaching longs is because that's what everybody did. And I'm like, but you have to have a lot of confirmations to do longs. So when I built longs, that's
yeah,
why we focus on the 4 hour and we focus on the 1 hours, because you have to have a lot of momentum and a lot of things in your favor to be successful. Like, you need a lot of confirmation for success. And a long isn't guaranteed because everything can line up. It still doesn't mean people are going to buy. The reason why I do only
right,
shorts a lot of my career, and that's really all I do, is because at the end of the day, once something goes up, there's one thing guaranteed: 100% they will sell. Someone's taking
right.
profits.
True.
I love shorts, but longs are also, when you have bull markets and things like that come in, you don't get your pullbacks like you normal, and you can make, a lot of money on the bull run side. So, it's also understanding when longs are happening, where people are buying. It's because you need to understand like the philosophy and the ideology behind when people are going to, you know, see that this is going to end. There's a wave one, there's a wave two, there's wave three. After wave three, we start to look for double tops and shorts because that's the end of the trade, right? You have to understand why people go long, how they're going long, while they'll still go long. And then once you've got all those in your head and you see them all play out, then you start attacking the short because you're in a better position of success. Because once shorts start to happen,